Yes, let's continue the discussion. Our online students are also so fast. They have a doubt on this Finance Act related one. One student already messaged. It's okay, no problem. So let me finish this topic also here itself. It will be over. Now, Finance Act has 4 parts, right? First part is dealing with what? Current assessment year tax rates. Okay, current assessment year tax rates. Second part is dealing with TDS rates. TDS rates also will have salaries related TDS rates, all that. Part 3 is talking about tax rates for various scenarios and salaries and advance tax provisions. Nothing but actually part number 3 is what mainly talking about the current financial year tax rates. Like in the current financial year, whatever you are going to earn, on that, at what rate you need to pay tax? You need to pay tax, of course, in the assessment year. At what rate you need to pay? Part 3 is what mainly talking about. Actually, I told part 2 with the part 1, right? It's you can substitute part 3 with part 1. Nothing but current in the latest Finance Act, part 3 will become part 1 of the next year Finance Act. Exact copy paste. Part 3 will become part 1. Actual TDS rates also will contain same discussion only. Part 2 also contains more or less same discussion, but part 2 is wider. In the sense, it also talks about TDS under various sections. Okay, so now current Finance Act part number 3 will become part number 1 of the next year Finance Act. Simple. You can make this statement. Okay, that's it. 99% they won't ask like this in exam, but if at all worst case if they ask also, you don't have to worry. Part number 3 is there, right? Tax rate for salaries, advance tax and other scenarios. Okay, normal tax regime. Companies, how much is the tax rate? Societies, how much is the tax rate? AOP buoy, how much is the tax rate? All that is there. And remember, in CA inter-level, for us main taxation is individual taxation. In CA inter, we are only going to discuss about majority, predominantly individual. And we are also going to discuss slightly firm taxation. Firm means partnership firm. You know, firm means generally organization. Firm, dictionary meaning is what, you know? Organization. Firm means organization. You might have heard about sole proprietor firm. Sole proprietor firm. Sole proprietor firm means what? It's a firm only, but a single owner. Many will have a confusion. Firm means partnership firm. No. Firm means any organization is called as a firm. Now, if it is a partnership pact, if the firm is registered under partnership pact with 2 or more than 2 partners, then that's a partnership firm. Then if it is registered under LLP Act, then that's an LLP. See, basically, you know, one small discussion, you know, we can do business either. Suppose we want to do some income generating activity. You can either do it in individual capacity, as an individual alone, you can do that. Or as an AOP or BOI, you can do that. Nothing but 2 or more than 2 people, if they come together, we call them as AOP. Simple. We call them as what? AOP. Basically, a company is an AOP. A partnership firm is AOP. LLP is an AOP. Society is an AOP. They are all AOPs basically. But if the AOP registers under partnership act, then that becomes partnership firm. If the AOP registers under LLP act, then that's become LLP. If the association registers under companies act, then that becomes company. Suppose, sir, AOP did not register anywhere. Simply it is called as AOP or BOI. That's how in income tax, everybody is a person. Are you getting it? AOP can be without registration also. If an association do some activity, an association is doing some activity without registration, we call them as what? AOPs. If they register under partnership act, that's a partnership firm. So basically partnership firm, LLP, Companies Act, all these are what actually AOPs only. Basically they are all associations only. They're not individuals, right? They're a group of people, right? That's why it's called association. Are you clear? Now, so what are the tax rates that are applicable for us? You know, in income tax, the tax rates are depending upon residential status. The tax rates are depending upon residential status. You are an SSC and you are earning income. You are an SSC and earning income. At what rate you need to pay tax? It is decided primarily first by residential status. What is a residential status? We have a next chapter, there we will discuss. if you are a resident in India, means you are residing in India. For example, you are residing in India for your different tax rates. Or you are a non-resident, means you are not residing in India. You settled abroad. Okay, you may be Indian citizen. You may be Indian citizen. That is, citizenship is not matter. Residential status is matter. Across the world, Indian tax law, US tax law, China tax law, any other tax law you take in anywhere in the world, income tax law is based on residential status. The tax rates for residents are generally lower. Tax rates for non-residents are higher. For example, a company, if you take corporate, a company, foreign company tax rate is 40%. Indian company tax rate is 20% onwards it starts. For Indian companies, the tax rate starts from 20% onwards. Now, you know, so as I already told, SSCs are broadly classified into resident and non-resident. See, we have another classification called resident, ordinarily resident, resident but not ordinarily resident, non-resident. I am not discussing residential status chapter. Briefly, I am discussing tax rates topic now. So, residential status in-depth discussion we will see in the next chapter. So, basically, SSCs are two types, resident and non-resident. Now, again, we have, I told you, right, we are discussing from whose point of view, individual and firm. These are the two main entities which will be tested for us in exams. Only individual, firm also very rare. Individuals only. So main, our provisions of income tax law at CA interlevel, from our exam point of view, we are all tested based on individual SSC taxation. If there will be a problem, there will be a question given to you. Individuals will be an individual will be there whose details will be given to you. He might be a salaried person, he might be engaged in business also. So an individual related details they'll give you, and their age also they will give you. You need to compute income and then you need to compute tax liability. This is how a question will come in exam. Mostly we will have individual taxation only. Companies taxation, AOP taxation, society taxation, trust taxation we don't have in CA Inter, we have only in CA final. We will discuss that in CA final. Clear? So individual taxation is only covered for us in CA Inter. Firm taxation briefly covered. Okay, and HUF taxation is also covered, but HUF is not that popular now. HUF organization is not that popular. It's some very rare, at few places only HUF taxation is popular. Okay, it's not popular everywhere now. So resident and non-resident, that's it. These are the two categories. Now for residents, tax rates are different. For non-residents, tax rates are different. Remember, again we have something called tax regime. There is something called tax regime. Again, that's another concept. Tax regime. You know, we have two tax regimes. We have two tax regimes. There are two types of tax regimes. One is default. By default, one tax regime is there. Default tax regime. Another regime we call them as optional tax regime, also called as normal tax regime. What is called as optional tax regime or normal tax regime. One is default. By default, this regime is applicable for everybody. That's why it's called default tax regime. By default, for every SSC, for every individual, default tax regime is applicable. There is a section called 115 BAC. We will be discussing it. See, in the first chapter, I am just giving you, introducing each and every topic. Okay. Gradually over a period of time you will get understanding of the entire connection. Okay, it will take little time initially. So those of you who are first timers, first chapter discussion will appear little vague because so many concepts are discussed in first chapter. In fact, ICI book, even our book also, we gave the same entire 115 BSc section is given in first chapter, which is a blunder. You should not discuss 115 BSc default tax regime related discussion in first chapter. Tax rates we can discuss, nothing wrong. How to compute tax we can discuss. Provisions of default tax regime full section we should not discuss in the first chapter. I will also not discuss default tax regime in the first chapter because in 115 BSc almost every other chapter discussion is there. For example, there is a chapter called income from salary. We have a chapter called income from salary, one of the lengthy chapter. Only if you understand that chapter thoroughly, you can then understand 115 BSc related to salaries chapter. Only if you understand PGBP thoroughly, some provisions of this you can understand thoroughly. But ICA book, what they did, they gave it in first chapter. You know, before new scheme, no, earlier where there is another scheme, old scheme is there, right? In that book, no, default tax regime is discussed in last chapter, which is very good. Because once a student learn everything, then finally he will know what is a different tax regime and he will understand. Now ICA book is containing default tax regime in the first chapter itself, which is absolutely wrong. You can discuss tax computation formulas, all that. Tax computation, how to do, all that we can discuss in first chapter. But provisions of entire 115 BAC, entire section we can't discuss in the first chapter. Okay, there is a way to learn. Slowly we will, just see, once entire coaching is over, once you get a command on all the chapters, then you read in whichever the order you want. No problem at all. But for learning purpose, this is not the right order. Okay, fine. So default tax regime, and there is another regime called optional tax regime, means SSC. See, whenever I say SSC at CA inter level, I am mainly talking about individual. Okay, so that's it. Now SSC, if at all he want to file income tax return, he want to show his income, he want to compute income, and he want to compute tax, by default department will compute as per default tax regime. By default department will compute the income as per default tax regime. But SSC has an option to choose normal tax regime. SSC has an option to choose normal tax regime. Now tell me, by the way, this act is what? Income tax, right? Tax on income. What do you mean by income, technically speaking? Suppose I'm doing a business. I'm selling goods. 1 crore is my turnover. Is that income? Is that income? That's only turnover. For your better understanding, what is income? In schedule 3, what is income? Net profit. If you want to understand in schedule 3 point of view, accounting point of view, what is income of a company? Net profit is income of the company. Income tax is applicable on profit. Income means profit only. Turnover is not my income. I sold goods to a customer for 1 crore. I purchased them for 80 lakhs. My income is only 20 lakhs. Income tax is applicable only on the income portion, not on the turnover portion. Are you clear? Now, so you need to calculate first how much is the turnover. Nothing but you need to first calculate gross receipts, how much you got. From that, you should claim some deductions. What deductions? Expenses. Sir, I sold goods for 1 crore. My expenses are 70 lakhs is the goods value. 10 lakhs I paid salary to my employees. I'm running a business. 1 crore is the sale value. Minus 70 lakhs purchase cost. 10 lakhs is my salary cost. 5 lakhs is some other administrative. Balance whatever is there, right? That is only income. The balance whatever is there, only that is treated as income. Understood? Everybody? Yes. Sir, I'm a salaried employee. What about me? For a salaried employee, what is income? Gross salary received how much from company? From company, how much you received? Gross salary minus income tax law talks about certain deductions. Okay, from income, no, you can claim some deductions. Deduction means what? From gross income, reduce something so that you will get net income. On this only we should compute tax. On this only we should compute tax. Now, whatever income we are getting, no, under whatever income you are getting, under income tax law, these incomes are broadly categorized into 5 heads of incomes. We will broadly classify income into 5 categories. What are the 5 categories? Salaries. First category is salary. Second category, house property. Third category, business or profession. Third category, business or profession. Fourth category, capital gains. Any other income, which is called as other sources. Now, salaries, the discussion is contained in section 15 to section 17. Only 3 sections are there, but 17 itself is the lengthiest section. 17 itself is the lengthiest section. House property discussed in section 22 to 27. Business or profession discussed in section 28 to 44D, something like that. One section is there. We don't have in our syllabus. We have in our syllabus what? 44AB, AD, ADA, AE. We have only up to AE. We have in our syllabus, we have only up to AE. Capital gains begins at 45, it ends at 55A. It ends with 55A. Other sources, the discussion begins as 56 and it ends at 59. Whatever income you are getting, you may be working in a company and getting salary. You are providing, you are a lawyer, you are getting some fees. You are selling a land. You purchased a land for some 1 crore. Now you are selling it for 5 crore. You are getting 4 crore profit. That is treated as straight away capital gain. I am getting interest. I gave a loan to somebody and I am getting interest. Other sources. I am running a business or profession. I am a chartered accountant doing practice. For example, I am running an academy. That's actually business or profession. I have a house. Okay, and I am renting it. House property. I am working in a company on an employment basis. Employer-employee relationship is there. Salaries. Suppose I am getting some income which is not a salary, which is not a house property, which is not a business. Then the debate comes, is it a capital gain or other sources? Then a debate comes, capital gain or other source. So anywhere you have to classify. Capital gain, if it is a capital receipt. If it is a sale of capital asset, okay, we will discuss that later. Let me not introduce that right now. Okay. Now one thumb rule I want to tell you. Thumb rule. You know, basically incomes are nothing but receipts. Income is nothing but a receipt. Receipts are broadly two types. Revenue receipt, capital receipt. Revenue receipt, capital receipt. Revenue receipt is always income, correct? Revenue receipt is no doubt income. Suppose I have a land, I sold land, I got 5 crore. Is it income for me? It's a receipt. It's a capital receipt. Capital receipts are not income. Remember, capital receipts are not income. Accordingly, capital receipts are not taxable unless specified explicitly. Unless specified explicitly. A capital receipt. I'm getting some money. I'm getting some cash. I'm getting some money. Or I'm getting some consideration. I'm getting some benefit. And it's a capital receipt. That is taxable only if there is a specific provision in the income tax law. If there is no specific provision, capital receipt is not taxable. Revenue receipt, by default it is taxable unless otherwise exempted. What is it? Unless otherwise exempted. I'm getting some receipt, interest income I'm getting. Capital receipt generally when do we get? On sale of assets. Capital receipt we get only when we sell something. Only when we sell some capital asset we get capital receipt. Capital receipts are different. Revenue receipt means what? Something that's a regular income. Some sort of periodicity will be there. That is called as what? Revenue receipt. By default, revenue receipt is taxable under any of the 5 heads of income. Either it should be a salary or house property, if it's a business or a profession. If none of these 3, then that revenue receipt is taxable under other sources. If none of this is there, other sources directly it is taxable, provided it's a revenue receipt. Capital receipts, nowhere taxable unless specifically mentioned. Suppose my friend gifted me one land. It's a capital receipt for me. Technically speaking, it is not taxable. But there is a section in 56. There is a section in 56, a subsection to clause number 10. That section says gift received is taxable. Since the section specifically says gift received is taxable, we are taxing it. If that section is not there, capital receipts are not taxable. If at all a section is not there, capital receipts are not taxable. I sold a land. I got 5 crore. I purchased it very long ago for 1 crore. I made a profit of 4 crore. But it's a capital receipt. Technically not taxable. But section 45 capital gains section says that is taxable. If at all capital gain section does not apply on a capital receipt, that is not at all taxable. So that's a thumb rule you need to remember when you are understanding entire income tax law. Clear? Now, so any income that we are getting is broadly classified into 5 categories. You know, under these 5 categories, we call them as actually 5 heads of income. How to compute income? Like we need to compute income under each head separately. First we should compute income under each head separately. Then we will total it. Then we will compute tax on it. I'm telling you briefly, okay? There are multiple steps. computation of total income. First compute gross total income, then reduce chapter 6 reductions, then compute total income. Like that, some multiple steps and all where there will slowly introduce one by one, step by step will go. So whatever income I get now, first whatever receipt I am getting now, first I will split that receipt into 5 categories. Now regarding this receipt, I would have spent some money, that you can claim it as deduction from the receipt. From the receipt, corresponding expenditure I will reduce it. That reducing activity is there, right? We call it as claiming deduction. We call in income tax as what? Claiming deduction. What do you mean by claiming deduction? Nothing but I have some benefit. Okay, gross receipt is there, but the entirely is not my income. Some expenditure I spent on this, that I should claim deduction. Balance income only liable for income tax. In every head of income, the computation mechanism is more or less same. I'm not saying computation format, I'm saying computation mechanism. Mechanism is same. Gross receipt minus deductions is equal to net income. Now I told, right, there are two tax regimes. In default tax regime, you cannot claim certain deductions. In default tax regime, you cannot claim certain deductions. You can't claim certain deductions, you can't claim. Okay, gross receipt is there. I spent some money. You can't claim in default tax regime. Directly without claiming deduction, it is taxable. Are you getting it? Whereas in normal tax regime, from gross receipt, any expenditure we incurred, fully you can claim deduction. Balance only taxable. Now, deduction claiming means understood. What do you mean by claiming deduction? From gross income, some expenditure you reduce it. That reducing activity is called as what? Deduction. Normal tax regime, you will get many deductions. In default tax regime, you will get only few deductions. That's the basic difference between default tax regime and normal tax regime. Now immediately you might get it out. So default tax regime, you said we will not get deduction. Optional tax regime, normal tax regime, we will get all types of deductions. Tell me, claiming deduction is best or not claiming deduction is best? Deduction claiming is best. What will happen when you claim deduction? Array, my turnover is 4 crore, my expenses are 3 crore, only on 1 crore I need to pay tax, because I am getting a deduction. In default tax regime, no, entire 3 you will not get. Some restrictions are there. You will not get entire 3 crore deduction. You will have some restrictions, which means your income will increase. If deduction decreases, net income will increase. If net income increases, generally the tax liability also increases. Now, in default tax regime, we don't get some deductions, right? Whereas in normal tax regime, we get all deductions, right? Will anybody choose default tax regime? Will anybody choose? But still many will choose. Why? Because in default tax regime, the income tax rates are lower. In default tax regime, the income tax rates are lesser rates. Whereas in optional tax regime, the income tax rates are higher. Income may be low, but tax rate is high. Whereas in default tax regime, income is high, tax is low. Every year what we need to do, you know? We need to check whether default tax regime tax liability higher coming up, optional tax regime tax higher amount coming. We need to check that, and then we will tell the SSC to choose this, choose that. That's how we guide. Again, for this some exceptions are there. PGBP income, SSC, default tax regime, one time claiming only. Some exceptions are there like this. We will come back to it later. Until now, got an idea? Yes. Now let's first discuss, you know, how to compute the tax. You know, if you see here, we have given something called tax computation format. Not here. We will go to tax computations directly. Some page number 17 or 18. Yes, here you see 15. Now we will be discussing the practical part. What are the rates of tax, surcharge and cess? You know, I have given one format here, which is not there in IC book also. You must follow the same format when you are computing tax. Even when you're doing rough working for an MCQ purpose, or you are presenting in a main answer, you must always follow the same format. So what is the tax computation format? In exam, no, they will give you total income, for example, or sometimes you might have to compute total income. Tax is computed on total income. Okay, total income they'll give you. First you should compute basic tax. First we should compute what tax? Basic tax. Then on the basic tax, if some conditions are satisfied, you should add surcharge. If on the basic tax, if some conditions are satisfied, you should add surcharge. Then you will get some subtotal, both put together, then you will get something called as subtotal. From that, you have something called relief and rebate. From that, you have relief and rebate. Reduce it. Then again, you will have a subtotal. So from first subtotal, relief and rebate you reduce, then you will get revised subtotal. Then you add something called health and education cess. On this subtotal, add cess. Then you will get gross tax liability or gross total, which is actually called as what? Gross tax liability. Gross tax liability. This is the tax which you need to pay to department in the assessment year. In the assessment year, you need to pay this much tax. Now let's understand how to compute basic tax, how to compute surcharge, how to compute all this one by one step we will understand. Again, I told you we are going to discuss tax rates predominantly from individual's point of view. Though in this chapter there were discussions about company tax rate, society tax rate, foreign company tax rate, so many discussion and all is there. We will see it only from MCQ perspective, not from problem descriptive perspective. We don't have descriptive problems on other entities taxation. We have only individuals taxation. Clear? Yeah. Now look at this. So what are the rates of tax for whom and all? Individual, HUF, AOP, BOI, AJP. What is not covered here? Firms are not covered. In income tax, you know, generally firm means what? Organization, dictionary meaning. But in income tax, firm means only partnership firm. Under income tax, firm means only partnership firm and LLP. So in income tax alone, firm means partnership firm and LLP. Generally firm means what? Anything. Sole proprietor also a firm only. Company is also a firm only. AOP is a firm only. Firm means what? Organization. Firm means what? This is bottle. Yes or no? This may be a different brand. That's it. At the end of this, a bottle. Company is a firm. AOP is a firm. Everything is an organization. Are you getting it? So sole proprietor is also a firm. That's why we call sole proprietor firm, partnership firm. But in income tax, only in income tax, firm means only partnership firm, only LLP. Only these two entities are called as firms under income tax. We have something called firm taxation. We are going to discuss it in our chapter called business or profession. We are going to discuss that in business or 6th chapter, right? Yeah, business or profession we are going to discuss. Okay, PGBP we call it as. Fine. Now, so as I told you, for 5 categories of SSCs, who are they? Individual, HUF, AOP, BOI, artificial judicial person. What are artificial judicial person? ICI, Institute of Chartered Accountants of India. That's an AJP. Are you getting it? Artificial judicial person. That's an artificial judicial person. So these are all judicial persons. Artificial. Is ICI a company? So any statute or any entity created by law, for them they are all coming under what category? AJP. Political party is an artificial judicial person. What is the tax rate applicable for political party? Same. AJP. It is liable for tax rates like AJPs. They are treated as AJP, artificial judicial person. Now for them, there are 2 tax regimes available. For them, there are 2 tax. But in this, no, we are mainly concerned about what? Individual. We are mainly focusing always on individuals. So default tax regime is there. Optional tax regime, which is also called as regular provisions, which is also called as normal tax regime. sometimes in exam they'll give you compute tax liability and total income, or compute total income and tax liability as per regular provisions of income tax, or compute total income and tax liability as per normal tax regime. Sometimes what they will give you, SSE has exercised the option of shifting out. Sometimes they'll give you what, the SSE has exercised option of shifting out of default tax regime. Like, what is the sentence? SSE has exercised the option of shifting out of default tax regime. Shifting out of means what? I am not choosing default tax regime, which means what I am choosing. Sometimes how they will give SSE has not exercised. SSE has not exercised the option of shifting out. See, by default, what regime is applicable? Default tax regime. If I don't want that, what should I do? I should exercise shifting out. I should shift out manually. Are you getting it? Automatically you will not be shifted out. SSE has to exercise the option of shifting out. When you're filing IT return, you should tick it. You should untick default tax regime and tick normal tax regime. Are you getting it? That's why unticking means what? Shifting out. SSE is not unticking. Are you getting it? SSE is not coming out. Then that is called as what? SSE exercising option of not shifting out. SSE not exercised the option of shifting out. See, once again you see, very important, because this decides your answer. Very careful. Many students default tax regime question, but they wrote optional tax regime answer, and then they came out. They think their answer is correct only, but not for the question. Okay, their answer went wrong. The 0 marks. Why? Because SSE exercised what options? Option of shifting out. Option of shifting out. SSE, this is one. There is another one. SSE not exercised. SSE has not exercised the option of shifting out. Exercised option of shifting out of default tax regime, or exercising the option of shifting out of 115 BSE. They may write like that also. 115 BSE, that is the section. You exercised coming out of DTR. Coming out of DTR, you exercised. What does it mean? Normal tax regime. You did not exercise coming out. You did not come out. You did not exercise anything to come out. You didn't exercise anything. Are you getting it? SSE has not exercised the option of shifting out, means default tax regime. Be careful. Anyway, they can give you. Okay. Sometimes straight away, simply they'll give you SSE decided to pay tax under regular income tax. Regular provisions of income tax. SSE decided to pay tax under normal provisions of income tax. SSE exercised the option of shifting out. That also they can give you. So be careful. MCQs tax computation, one question every attempt they're asking. One question, 2 marks question on tax computation liability, where these keywords will be tested the most. Clear? Now, fine. So we understood when default tax regime will apply, when optional tax regime will apply from exam point of view. Okay. Now, what are the tax rates under default tax regime? This I will come back later. Okay. First we will finish normal tax regime. What are the tax rates under normal? What is most important in exam? Default tax regime or normal tax regime? Normal tax regime. Major question paper will be based on normal tax regime. What again students do here, they don't know all that. They only practice default tax regime mostly. Every question paper you see, May 25 you see, sorry, Jan 25 paper you see, September 24 paper you see. Only optional tax regime is what tested most. Default tax regime, the weightage will be less than 5 marks, less than 10 I can say. Default tax regime is not popular yet. Only for salaried people it is popular. Business people and all. Suppose I'm an individual, my main activity, my main business, my main thing itself is business. I will not, default tax regime is not suitable for me, not beneficial for me. House property head of income point of view, default tax regime is not beneficial for me. Able to understand? Optional tax regime is only beneficial. Now look at. So Regular or normal income, regular tax regime or normal tax regime? What are the tax rates? Remember I told you SSC, before you discuss about tax, first you should, whenever a question is there in exam from tax computation, first you should check is the SSC resident or non-resident. Then you should check default tax, optional tax. Then you, after you decide both of this first you decide, then you think about the tax rate. Sir, normal tax regime, individual, normal tax regime, resident. Okay, resident. What is the tax rate applicable? The slab rates for assessment year 25-26. Assessment year 25-26 means for in assessment year 25-26 we are computing tax liability means on which year income? Previous year 24-25 income. So if you are earning any income in 24-25, on that income tax will be calculated as per the below rates. Okay, so the slab rates for assessment year 25-26 applicable to individual, AJP, all that, which has exercised, you see the wordings, which has exercised the option of shifting out of default tax regime, means you came out of default tax regime. Since you are coming out of default tax regime, for you the following tax rates apply. Now again, if you remember, I told you, right, individuals are again two types, residents and non-residents. Under optional tax regime, residents are again classified into three categories. Only in optional tax regime this classification is there. Residents are classified into three types. This three types classification, individual is classified into three types. Individuals are treated as three types. Resident individuals. Only this classification is there in optional tax regime, not in default tax regime. Now in optional tax regime, SSCs are called as normal citizen, senior citizen, super senior citizen. Individuals are classified into three parts: normal citizen, senior citizen, super senior citizen. Super senior citizen means what? You have completed 80 years of age by 31st March of the relevant previous year. Okay, fine. Again, one more word. Assessment year 25-26, what is a relevant previous year? Relevant previous year is 24-25. Now onwards, in entire discussion, I will not use the word previous year simply. I will use the word relevant previous year. As on 31st March of relevant previous year, as on 31st March of relevant previous year, if at all I completed 80 years of age, means I am entering into 81 on 1st April. I am starting 81 on 1st April. 81 not complete. 80 completed, 81 started on 1st April. 1st April of the assessment year, I am entering into next, 81. That means as on 31st March I completed 80. As on 31st March I completed 80 means I am super senior citizen. Sir, as on 31st March as on 31st March of the relevant year, no, I completed only 60 years of age, sir. Then I am a senior citizen. Sorry, 31st March already came. My age is still 59 only. 60 not yet completed. 60 I entered, but not yet completed. Then I am called as normal citizen. What is the cutoff date to check senior citizen or normal citizen? All that throughout the you don't have to check. 31st March you check. As on 31st March, 60 years age completed, not completed. Are you getting it? As on 31st March, 60 years of age is not completed. That's it. He's not a senior citizen. So senior citizen means what? Just a minute. So senior citizen means what? Who completed 60 years or more than 60 years. Super senior citizen means what? More than 80 years. More than 80 years. Again, some students, they will be asking this running notes. I am scribbling just randomly, not required. Okay, you just observe everything is there in our book very beautifully. You don't require this notes at all. I just randomly. How this is useful? Tell me. Will this be useful later to you? Unnecessary. That's the reason I will never give my running notes. Okay, this will unnecessarily confuse you. It will not be beneficial to you. It will be confusing you. Okay, so that's it. So super senior citizen more than or equal to 80. As on 31st March of the relevant previous year, if my age is not yet completed 60, I am called as normal citizen. Why this breakup I need to learn? For a normal citizen, up to 2.5 lakh, zero tax. if the total income in a year, in the entire year, by the way, it's not monthly income, total income in a year, if it is up to 2.5 lakh or below 2.5 lakh, zero tax. But for a for a senior citizen, 3 lakhs up to 3 lakhs income, the tax rate is zero. For super senior citizen, 5 lakhs is basic exemption. Are you clear? Fine. This is not simply just like that. We have some provisions here. What is the tax rate for normal citizen? You see, specifically I'm mentioning resident normal citizen. You see below also resident senior citizen. You see again third one, resident very senior or super senior. Any word can be used. And you see for non-residents, the basic exemption limit is always 2.5 lakh irrespective of age. Age doesn't matter for non-residents. So non-residents are not classified into 3 categories. Non-resident individual, that's it. Age and all doesn't matter. How much is basic exemption? 2.5 lakh. Whereas individual resident in India, then we will ask his age. We want their age, individual age. Now for tax rates for resident normal citizen, how? You know, when I'm studying in 2008-9, that time 9-10, that time, tax rates are different for men's and tax rates are different for women's. Okay, in the very old tax regime. So for men's and women's, the tax rates are different. Later from 2008-9 onwards, I think they made it uniform. Tax rates for men and women is same. Now it is simple, individual. Okay, so what are the tax rates for individuals? That's it. So up to 2.5 lakh, what is the tax rate? Zero. Sir, my income is more than 2.5 lakh, but less than or equal to 5 lakh. My income is up to 5 lakh. Then my tax is 5%. Then the tax rate is how much? 5%. You see here, I mentioned the word slab. Okay, individuals, the tax rate is computed based on slab system. What is slab system? You need to first understand flat system. There is something called flat system, flat tax rate, that system. Slab tax rate system, flat tax rate system. Okay, first let me finish this, then we will discuss about that. If my income is more than 5 lakhs and up to 10 lakhs, then the tax rate is 20%. Just highlight only, observe only whatever I am highlighting. Okay, don't observe the remaining content. If my income is above 10 lakhs, then the tax rate is 30%. How this section, how this particular tax rates concept has to be applied? For example, in exam they will give you one question. They'll give you one question. What are the tax rates, by the way? Up to 2.5 lakh, 0. Okay, 2.5 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Above 10 lakhs, whatever income you have, 30. Suppose my income is 12 lakhs. How should I compute tax? 12 lakhs multiplied by 30% is equal to 3.6 lakh. Wrong. This is flat system. This is called as flat system. Flat system is not correct. For individuals, it is slab system. Like this 12 lakhs, no. Divide this 12 lakhs, no. Divide this 12 lakhs into our slabs. First 2.5 lakh income, 0 tax. Next income is, next slab is what? 2.5 lakh to 5 lakhs. I have 12 lakhs, so which I have more than 5 lakhs. I have 12 lakhs income is which is more than 5 lakhs. So 2.5 lakh to 5 lakhs is first category. Second slab. This here 2.5 lakh to 5 lakh means how much income is there? 2.5 lakh. On this, my tax rate is 5%. Again, third slab is what? Again, here, what is the third slab? 5 lakh to 10 lakh. I have 12 lakhs income, man. So 5 lakh to 12 lakh means 5 lakh to 10 lakh slab is there, right? 5 lakh to 10 lakh slab means what income? Yeah, how much is the income? 5 lakh at 20%. This is 12,500. This is 1 lakh. What is this? 1 lakh. I have income more than 10 lakhs. More than 10 lakhs, how much I have? Only 2 lakhs. Above 10 lakhs, how much income I have? 2 lakhs, which is taxable at 30%, is equal to 60,000. Are you clear? Now, again, let us take another example. I have 9 lakhs. Okay, first let us compute the total tax here. So what is the total tax, basic tax? 1 lakh 60 plus 12,500 and 0 here. Okay, so 1 lakh 72,500. This is my basic tax. Remember I told you at the first tax computation format, first step is what? Basic tax computation. So that's it. Now suppose no, my income is exactly 9 lakhs. How should I compute tax here? Same structure. First 2.5 lakh 0, 2,50,000 to 5 lakh, yes or no, which is 2.5 lakh, which is taxable at 5%, which is 12,500. 5 lakh to 10 lakh, next slab is 5 lakh to 10. Array, my total income itself is 9, so I can't keep 10 here, I can only keep 9. So which is equal to 4 lakhs only I have. Above 5 lakh I have only 4 lakhs income, which is taxable at 20. So 80,000. Above 10 lakhs not applicable because my income itself is 9 lakhs. So towards the total tax, so 92,500. Suppose only for normal citizen I'll explain like this. For senior citizen and all you should only do voluntarily. Okay. Now next, suppose my total income is 4.5 lakh. My total income is 4.5. First slab is what we have here, up to first 2.5 lakh. This is first slab, this is second slab, this is third slab, this is fourth slab. Like that you can divide. So income will be divided for normal citizen into 4 slabs. Even for senior citizen also income is divided into 4 slabs. Whereas super senior citizen income is broadly divided into 3 slabs. You should divide the income like this. Okay. Now suppose 4.5 lakh income I have. First 2.5 lakh, what is the tax rate? 0. So 0% is equal to 0. Next 2.5 lakh to 5 lakh. Array, here 5 is not there. My total income itself is 4.5. So above 2.5, second slab is up to 5 lakhs, right? But my income itself is less than second slab only. So 4.5 lakh only I'll consider. So how much is there? 2 lakhs, which is taxable at 5%. 10,000. So what is my basic tax? 10,000. Are you clear? Suppose 5%, no, 2 lakhs into 5, correct? No. Anybody? That's fine. Next, suppose no, this SSE is not a normal citizen. This SSE is a senior citizen. He has completed 60 years of age already as on 31st March. He's 64 or 65 age, for example, or just completed 60 years of age. Tomorrow his birthday. 1st April his birthday, 61st birthday. Means 31st March 60 is over, which means he's a senior citizen. Now he's a senior citizen, right? How should I compute the same 4.5? Look at this. Senior citizen. What is the slab rate? First slab up to 3 lakhs 0. Then 3 to 5 lakh 5%. 5 lakh to 10 lakh it is 20. Above 10 it is 30. Super senior directly up to 5 0. The moment 5 lakhs income crossed, up to 10 lakhs slab, 20% straight away, and above 10 it is 30%. Now look at this. Senior, suppose if at all 4.5 lakh senior citizen income, how I will split? 4.5 lakh, first 3 lakhs 0. 3 to 5 lakh, I don't have 5 lakh, I have only 4.5, which is equal to 1.5 lakh into 5%. So how much it is? 7,500. Yeah, 15 5s. 7,500. So how much it is? 7,500. Are you clear? Suppose 9 lakhs, right? Senior citizen, for example, here we understood from normal citizen. Senior citizen point of view, let us understand. First 3 lakhs 0. 3 to 5 lakh, 2 lakhs is there, into 5% is equal to 10,000. 5 lakh to 10 lakh, but 10 lakh is not there. 9 lakh only is there in that slab. Maximum income in that slab is what? 9 for this case. 4 lakh into 20%, 80,000. 80 plus 90, total income, total tax liability 90. Are you clear? If you see between a normal citizen and senior citizen, normal citizen tax is 90 to 500, senior citizen tax is 90. 2,500 rupees only extra tax savings. Here also you see 10,000 normal citizen and senior citizen 7,500. So 2,500 only tax saving. Able to understand? So suppose 12 lakhs is there. 12 lakhs is there. Now I will compute from super senior citizen point of view. I will compute from super senior citizen point of view. First 5 lakhs 0. 5 lakh to 10 lakh. SSE has 12 lakhs income. So 10 lakhs slab is also there. So 5 lakh to 10 lakhs means 5 lakhs straight away 20%, 1 lakh. Yes or no? So straight away how much it is? 1 lakh. 5 lakh to, above 10, 2 only is there. Above 10, how much ever income is there, that much into 30% flat. Okay, 2 lakhs into 30% is equal to 60. So total how much? 1 lakh, 1,60,000. Now you see, normal citizen 1,72,500, senior citizen 1,60,000. So the tax amount difference is 12,500. Between a normal citizen and super senior citizen, 12,500. Between normal citizen and a senior citizen, 2,500. Between senior citizen and super senior citizen, 10,000. Are you getting it? That's how the tax rate is different. Okay, so these are the tax rates for normal citizen, senior citizen, super senior citizen. So I hope you understood, everybody. This is called slab system. Means you will be given income. Directly don't apply it. Divide that income into multiple slabs. First slab, second slab, third slab, fourth slab. Maximum 4 only. For 80 years and above age only 3 slabs will come. For remaining 2 cases 4 slabs will come. First to 2 and off for 3, next to 2 and off for next 2. So no, 2 and off to 5 or 3 to 5. Then 5 to 10 same for both of them. 5 to 10 lakh slab is same for everybody. Above 10 also same for everybody. Below 5 lakhs only if at all income is there. Yes or no? For below 5 lakhs income only, you need to see the age clearly. Remember, only for residents we will look at the age. If it's a non-resident, the basic exemption limit is always 2.5. Means this tax rate is only applicable for non-residents. For all individual non-residents, tax rate is up to 2.5 lakh, 0. 2.5 lakh to 5 lakh, 5%. 5 to 10, 20%. Above 10, 30%. This is the tax rate constant for all non-resident individuals who are earning income in India. Are you getting it? Now, you see, they have given the clarification. The CBDT has clarified through a circular, okay, that an individual born on 1st April, if at all you are born on 1st April, is considered to have attained the specific age as on 31st March, which is the day before their birthday. If 1st April is my birthday, 31st March I would have treated as 60 years completed. Okay, for example, a resident individual whose 60th birthday comes on 1st April 2025, as on 31st March 2025 he is already a senior citizen, is deemed to have attained 60 years of age as on 31st March 2020, actually sorry, that is 31st March 2025. Okay, and qualifies for basic exemption limit of straight away 3 lakh. Straight away how much? 3 lakh. Able to understand? All of you? That's it. So previous year 24-25 point of view, that is okay. That's it. So these are the basic tax rates. Now we have something called special tax rates. Okay, this is basic tax rate. When you are computing tax, no, again I'll tell you, this is most important checkpoint. Like I told you, right, 5 heads of income. Okay, so income from salary, income from house property, income from business or profession, income from capital gain, income from other sources. We will compute. In each chapter we are going to compute like this only. We'll compute in each chapter. We have a separate chapter for salary, separate chapter for house property. How to compute income we are going to discuss in upcoming chapters. You total it. What you will get, you know, gross total income. What you will get is called as gross total. See, actually in between, no, some adjustment is there for clubbing provision. Some adjustment is there for set off and carry forward. That's actually will be done as part of this itself directly. Okay, we will discuss that later. Sum of all heads of income, that is called as gross total income. A total of all heads of income is straight away called as gross total income. From gross total income, you have something called chapter 6A deductions. You have something called chapter 6A deductions. If you reduce that, what income you will have is total income. This total income is what we need to compare with the slab rates and then start computing tax. So we will compute tax on what? Total income, not on gross total income. Be careful. In exam sometimes they'll give you an MCQ, gross total income they'll give you, total income they'll give you. You should compute tax on, or an MCQ narration they will give you. Tax will be computed on gross total income of the SSE. Wrong. Tax will be computed on total income of the SSE, right? That option you need to choose. Able to understand? So total income is relevant. Now again, you know, this total income is divided into two categories. This total income is divided into two categories. Incomes chargeable to tax at normal rates. Again, don't confuse it with normal tax regime. I am not talking about tax regime. I am talking about tax rates. Incomes taxable at special rates. More clearly, income specific tax rates. What are they? Income specific tax rates. SSE specific tax rates. What are they? SSE specific tax rates. When I say individual, what is the tax rate? Up to 2.5 lakh 0, 2.5 lakh to 5 lakh 5%, 5 lakh to 10 lakh 20%, beyond 10 lakh 30%. The moment we say individual, this is the tax rate. The moment we say company, 30% flat. Partnership firm, 30% tax rate. Foreign company, 40% tax rate. SSE, what is the type of the SSE? Accordingly, tax rate will apply. These are SSE specific tax rates. But you know, there are some incomes. Whether the SSE is individual, whether SSE is HUF, whether he is a company, whether it's a partnership firm, doesn't matter. That income is liable for a specific tax rate. We call them as special tax rates of income. Special incomes and tax rates. For example, you might know lottery amount, lottery. Suppose, no, I won a lottery. Okay, I won a lottery of 5 lakh. I will not apply up to 2.5 lakh, 2.5 to 5, 5 to 10. That 10 logic I will not apply. Straight away, lottery income is taxable at 30%. I have a long-term capital gain. Okay, what is a long-term capital gain? I'll discuss later. The tax rate is straight away 12.5%. The tax rate is straight away 12.5. I know some of you might think before amendment, sir, January 25 attempt it is 20%. No, long-term capital gain. No. Right now there are amendments. Capital gains is the one chapter where major amendments happened. TDS and TCS chapter is another chapter where major amendments happened. These are the two chapters where major amendment happens. Okay, fine. Right now, what is the long-term capital gain tax rate? 12.5%. Okay, just that alone, you remember, we will discuss in depth in capital gains tax. Same way, there is something called short-term capital gain tax under 311A. There is a section called short-term capital gain 311A where tax rate is 20% now. Earlier, before amendment, no, it is 15. After amendment is 20. After amendment, it is 20. Then we have another tax rate, black money. Black money. For example, if income tax identified undisclosed money, you have suddenly the income tax department conducted a raid, or your family celebrated one birthday function or marriage function so grand, 1 crore you spent on the family marriage function. Income tax department, local income tax officer came to know about this. Then they inquired background. And they saw that your income tax return shows only 5 lakhs income every year. Then how come you spent 1 crore on the marriage? They got a doubt. Then they investigated. They discovered you have so much of black money. The money which you didn't show to the income tax authorities. You didn't pay tax on that. Now they discovered it. That entire 1 crore is taxable at 60% tax rate. That entire 1 crore is taxable at 60% tax rate. That entire black money will be treated as other sources income. They will be treated as other sources income, and straight away that income alone is taxable straight away at 60%. Okay, fine. Black money provision not that important for us right now. So remaining, you understood? Now, for example, suppose, no, see this question very careful. Okay, suppose SSE has total income 20 lakh. They'll give you problem like this. SSE has a total income 20 lakh, and additional information they'll give you. What information? This total income includes long-term capital gain, which is some 2 lakh, long-term capital gain 2 lakh, short-term capital gain 311A some 3 lakh, lottery, okay, which is some 2 lakh. Now compute the basic tax they will ask. For your information, long-term capital gain tax rate is 12.5%, short-term capital gain tax rate is 20%, lottery the tax rate is 30%. Okay, SSC has business mainly. Okay, remaining income is what, business income. Remaining income is from business. Okay, compute basic tax. Those of you watching online, please pause the video, compute the basic tax, and then continue watching the video. Every time whenever I'm solving a problem, you should pause the video. First you should solve it, then you have to compute. Now we will compute parallelly simultaneously. Okay, now so 20 lakhs is there. How should I compute in exam? Every time whenever you are computing tax, generally in exam when you are solving total income, you compute it. Tax you will compute, right? Split this income into two categories. What are special incomes? Identify. First, always whenever you are computing tax, don't directly apply percentages on total income. That's always wrong. You may be very good at provision. You must also follow one protocol. When you're solving, you must always follow one structure. A format if you follow always, even if you're weak in provisions. If you follow formats correctly, the process of solving method, if you follow correctly, 99.99% you will get right answer. Are you getting it? Now, so total income, right? Now I'm splitting into special income. How many special incomes SSE has? 3 special incomes. So now I will list it out. What are the 3 special incomes? Long-term capital gain, which is taxable at, which is covered under section 112. How much is the long-term capital gain? 2 lakhs. Yes or no? Then short-term capital gain, 111A section related. Sir, what is 111A? All that we will discuss later. Okay. Now 111A short-term capital gain, 3 lakhs. Then lottery income, how much? How much is the lottery income? 2 lakhs. And just now we saw long-term capital gain 12.5%, short-term capital gain 20%, lottery 30%. Okay. Now here you call it as balancing figure. Always remember it is balancing figure. Normal income you will never compute. Okay. Now 20 lakhs is there, right? Minus 2, minus 3, minus 2. Total 7 lakhs you remove. 20 lakh minus 7 lakhs. Out of 20, 7 lakhs is taxable at special rates. Remaining income how much? Remaining income is what I call it as balancing figure. Remember, normal income is, this is actually balancing figure is what income, normal incomes. Balancing figure is nothing but normal incomes. Taxable at what rate? SSC specific tax rate. Normal incomes are taxable at what rate? SSC specific. Sir, it's a partnership firm, sir. Then normal income is taxable at 30%. Sir, it's an individual, sir. Then slab rates. It's a company, sir. 30%. It's a foreign company. 40%. So balancing figure is what? 13 lakhs. Okay. Now this 13 lakhs. We are solving individual. Now how to? Income is computed at what rate? Slab rates. Again, don't compute immediately. What is the age of the SSE? What is the residential status? Sir, SSE is resident and SSE is a senior citizen. Then this 13 lakhs divide into 4 slabs. Correct? Huh? First slab is what? First 3 lakhs. Slab rate is 0. Next slab is what? 3 to 5. 2 lakhs. Then slab rate is 5%. Third slab is what? 5 to 10. SSE has a more than 5 lakhs income or more than 10 also is there. Normal income is more than 10 lakhs. Therefore, next to entire 5 lakhs is taxable at 20. About 10 lakhs, how much income is there? 3 lakh, which is taxable at 30%. Able to understand? Now 0, 10,000. This is 1 lakh. Yes or no? This is 90,000. Now what is the total? What is the total? 2 lakhs. This is the tax amount on normal income portion. We should also compute tax amount on special incomes. Long-term capital gain 2 lakh into 12.5%. How much it is? 25,000. Then 3 lakh into 20%. Then 2 lakh into 30%. So what is the total tax here? 1,45,000. Now what is the total basic tax? Total basic tax is equal to 3 lakh, exactly, 3 lakh 45. This is how basic tax has to be computed when total income includes special incomes also. Special incomes, no, you know, these incomes, no, these are the tax rates which are same whether you are a senior citizen, super senior, normal citizen, company, firm, AOP, BOI, individual, doesn't matter. These are the tax rates which are, I told you, special tax rates means what, special incomes means what, like special tax rates means what, income specific. Here tax rate is decided not based on SSE type, it is tax rate is based on income type. Now we are discussing, slab rates, all that. For individuals these are tax rate, for firms these are the tax rate, for so and so these are the tax rate. These tax rates are for which incomes of those SSEs? Normal incomes of those SSEs. So whatever tax rates that we are discussing here, right, whatever tax rates we discussed, right, these are all normal incomes tax rates. For a partnership firm, normal income is taxable at 30%. So now what I'm trying to tell you is, you are getting income, right? That income from tax point of view, tax computation point of view, the incomes are again two types: normal incomes, special incomes. Special incomes are taxable at a special rate. Normal incomes are taxable at normal rate. Until now clear? All of you? Everybody? So now tax, I mean total income, right? Tax amount on normal income, how do you compute? Normal income first, how will you compute? As a balancing figure. When you are computing tax amount on normal income is always a balancing figure. So special income is 0, sir, then total income itself is normal income. From total income, eliminate incomes which are taxable at special rate. Eliminate them. Whatever left over, that's a normal income. Are you clear? Some students, what they do, they don't apply balancing figure. They take PGBP, business income, how much? They will take it here. House property income, how much? They will bring it here. Never do that. Normal income is always a balancing figure. Generally, it's a balancing figure. Are you getting it? All of you? That's it. Now, so what are the tax rates? There is a section called 112. What is this section talks about? Long-term capital gains. Long-term capital gains. What is the tax rate straight away? This alone you remember for time being. 12.5% without indexation. Okay. Before 23rd July 2024, the tax rate is 10%. On or after 23rd July 2024, the tax rate is 12.5%. Very simple. Sir, I got a capital gain, sir, in June month 2024. Then my tax rate on that capital gain is 10%. Sir, I got capital gain in August 2024, sir. Capital gain, long-term capital gain. Then the tax rate is 12.5%. But I'm telling you right now, 10 is when, 12.5 is when, that and all leave it. Because no, we are going to discuss capital gains in depth in capital gains chapter. What is this 23rd July? Everything I'll discuss in capital gains topic. Okay. Now, there is another section called 112A. That is also talking about long-term capital gain, where the tax rate is same. What is the tax rate? 12.5% on gain exceeding 1.25 lakh. On long-term capital gain exceeding 1.25 lakh. Even before amendment, it is 10% tax rate. Here it is again 1.25. Immediately some students might get a doubt, sir, in both the cases, sir, I am a repeater, sir, I wrote January attempt, sir. As per the previous amendment, 1 lakh only it is there here. But now as per the latest amendment, 1.25 lakh. Okay. See what happened in capital gains section, I'll tell you. Finance Act number 2, I told, right? 2024 in the election year. So in Finance Act number 2, what they did is, with effect from 23rd July 2024, if any capital gains you are getting, if it's a long term, with effect from 23rd July 2024. By the way, we are discussing about which previous year? Remember this always in the back of the mind. Previous year 24-25. Previous year 24-25 means we are earning income from 1st April 2024 to 31st March 2025. We are earning during this period income. Suppose I am an investor in a companies. I have so many shares. Long term. I sold them before 23rd July. Before 23rd July 24. Or I may sell them on or after 23rd July 2024. Anywhere I can sell. Some shares I sold before 23rd July. Some shares I sold after 23rd July. Some shares I sold before 23rd July. Some shares I sold after 23rd July. In January exam, no, January 2026, sorry, January 25 attempt you wrote, right, exam. That is based on which previous year? 23-24 previous year. This amendment came in which previous year? 24-25. Earlier, no, old previous year, that time, suppose I'm having 112A capital gain. There is a capital gain called 112A. What does it mean? I am selling listed company equity shares. I am selling listed company equity shares after 1 year of purchasing them. I purchased 1 year before and now I am selling listed company equity shares. Old, up to Jan 25 exam, what is the provision, you know, up to Jan 25 exam? Nothing but up to previous year 23-24. What is the tax rate, you know? Suppose I sold 2 lakhs. I got a profit of how much? 2 lakhs. 1 lakh, remove it. Remaining 1 lakh is taxable at 10%. Remaining 1 lakh is taxable at 10%. Remaining 1 lakh is taxable at 10%. That is when up to Jan 25 exam. But for May 25 exam purpose, what is it? I got a capital gain. Same 2 lakhs profit I got. Total year full profit is 2 lakhs. I will not compute tax. First I will see out of this 2 lakhs, how much profit I got before 23rd July, but on or after 1st April. In this year only I made 2 lakhs profit. Or else let us assume for convenience sake 3 lakhs. Okay. In this year only I got 3 lakh profit. Total profit 112, 3 lakh. How much of this 3 lakh? Before 23rd July, but after 1st April, how much of it I got? 2 lakhs I got. How much I got? 2 lakhs. Remaining 1 lakh is on or after 23rd July, but before 31st March. That's it. Total, my profit is 3 lakhs only. Listed equity shares I sold, 3 lakhs is only my profit, total profit. But 2 lakh profit I already accrued when 23rd July before. Nothing but I sold when 23rd July before only I sold the shares. 2 lakhs profit I made. Again I have few more shares. I sold them after 23rd July. There I have profit of 1 lakh. Are you getting it? Now, how to compute the tax rate? First 1,25,000. First 1,25,000. Remove it. Balance 75,000 is taxable at what rate? 10% before amendment. After amendment, straight away taxable at 12.5. Don't reduce once again 1.25 lakh. On the entire long-term capital gain, from financial year 24-25 onwards, entire long-term capital gain on equity shares, listed equity shares, 1,25,000 is exempted. Up to financial year 23-24, on the entire capital gain, 1 lakh is exempted. 24-25 onwards, 1,25,000 exempted. See, they increase the tax rate, na? They need to give some benefit also, right? Earlier 1 lakh exempted, 10% tax rate. Now it is 12.5 tax rate, 12.5% tax rate, 1,25,000 exempted. Are you getting it? 1,25,000 is not separately for before 23rd July and after 23rd July. No, that is full year. In 23-24 Jan exam, 1 lakh you considered for full year, right? Here also 1,25,000 for full year. So 1,25,000 before amendment. That, see, this is exemption in that year. It's not about amendment. Are you getting it? So long-term capital gain under 112A, there are 2 amendments. 1, tax rate is increased. 2, exemption limit is increased. Exemption limit is same throughout the year. Tax rate is different. Before 23rd July, the tax rate is 10%. After 23rd July, on or after 23rd July, the tax rate is 12.5%. Are you clear? So 2 lakhs minus 125. Since already 1,25,000 exemption I claimed here, I cannot claim it here. Now some students might get a doubt. Sir, instead of this, can I reduce 1,25,000 here? No, it's FIFO. Exemption should be calculated as per FIFO order. First 1,25,000 is exempted. Are you getting it? You are getting long-term capital gain on listed equity shares 112A long-term capital gain. Yes, I'm getting it. First 1,25,000 exempt. Balance amount. Is that amount profit before 23rd July? Yes, then 10% tax rate. Any other profit on or after 23rd July? 12.5% tax rate. One student, no, they asked me, like, what are they asking me? Sir, before 23rd July, it is 1 lakh, no exemption. No, 1 lakh exemption is for 23-24 previous year. 1,25,000 exemption is for 24-25 previous year. Just because I covered here 1,25,000, that doesn't mean you will get 2 times 1,25,000. 1,25,000 limit exemption is per annum. Full capital gain. It's not 23rd July before 125, after 23rd July 125. No. Are you clear? All of you? Yes. So again, there is another capital gain called 111A. Now, right now, after amendment, what is the tax rate? 20. But before amendment, no. If at all I made a profit before 23rd July, my tax rate is only 15. Winnings from lottery, horse races, games, online games, what is the tax rate? 30%. Unexplained money, unexplained income, undisclosed income, black money, what is the tax rate? 60%. Okay. On regarding black money, taxation of unexplained money, some provision is given. We will come back to it later. Okay. So now what is the checkpoint here? What is the checkpoint here? The moment you computed total income. If the problem is asking you about tax computation, how you should compute tax? Total income divide into 2 types. First, special incomes allocate here. Okay. Long-term capital gain, 112A how much? 111A how much? Normal 112 capital gain how much? 115BB how much? 115BBJ how much? Getting it? You see here. 115BBJ, 115BB how much? Allocate. Then on that apply tax rate separately. Okay. Apply. Sir, I allocated here some money, sir. Still I have some amount left here. Balancing figure. Here you apply SSE tax rates. SSE specific tax rates. If it's an individual, slab rates. If it is a partnership firm or company, whatever the tax rate that we are going to discuss later, at that rate you apply. Then you will get what? Tax amount. Able to understand. That's it. So this is how we need to compute tax on, special incomes and normal incomes. This is how we need to compute tax. Clear? Now let us understand one more concept called unutilized basic exemption limit. Okay, until now clear everybody? Fine. So let's hold for 5 minutes gap, then we'll continue. Okay, that's it. Are you comfortable until now? Yes. Structurally one by one I'm increasing. Okay, so then we will start computing various problems. Yeah. Yes. Now if you see here special rates of income, here there is one point which I told. For resident individuals and HUFs, unutilized basic exemption limit, if any, can be utilized to set off against short-term capital gain under 111A, then long-term capital gain and 112 or 112A. What does it mean? Very simple. Suppose I have, I don't have any income in the year, only one income, long-term capital gain. How much I have? 5 lakhs I have. Okay. Now I need to split this, right? As usual, my total income is 5 lakhs. How much is my special income, long-term capital gain? 5 lakhs. What is the balancing figure? 0. Balancing figure is taxable at what rate? Slab rates. Whereas long-term capital gain is taxable at what rate? 12.5%. I told you what until now previous class, this is how you should compute tax. And you should total it and then basic tax will come. But now if you see here, my normal income is 0, which is less than basic exemption limit. And I'm a normal citizen. Up to 2.5 lakh rupee, generally I will not have any tax amount, right? Up to 2.5 lakh, generally I will not have a tax amount, right? But I don't have a normal income to use this benefit. Income tax department is giving me a benefit. What benefit? Your normal incomes up to 2.5 lakh, no need to pay tax. Sir, I don't have a normal income itself. Or I have only 1 lakh income, less than 2.5 lakh. You are giving me basic exemption limit 2.5 lakh, right? I am unable to utilize the benefit. What can I do now? It's unfair, no? So what department said, okay, if you have unutilized basic exemption limit. Unutilized means what? See, they are not saying basic exemption limit set off. They are saying unutilized basic exemption. Unutilized basic exemption means what? If your normal incomes, which is balancing figure, if this normal income is less than basic exemption limit, that extra benefit that you are losing, right? That benefit you can set off. That benefit, the unutilized basic exemption limit, can be set off first with the short-term capital gain. Then you can set off against long-term capital gain 112 or 112A, as the case may be. Like, what does it mean? For example, let us do one problem here. Okay, suppose SSE has long-term capital gain, that to which one 112A, long-term capital gain 112A, SSE has 3 lakh. How much SSE has? 3 lakh. Short-term capital gain SSE has 2 lakhs. Okay, whereas total income of the SSE is 7 lakh. Total income of the SSE is what? 7 lakh. Okay, total income is 7 lakh. Now let us compute tax on this particular 7 lakhs. Okay, now how should I compute? Total income is what? How much? First of all, 7 lakh. Okay, now let me split that into two parts. Always first I should split first I should eliminate special income. Special incomes are what and all we have in this example? Only two special incomes were there. 112A special income how much? 3 lakh. 111A special income how much? 2 lakh. So automatically balancing figure is how much? And SSE is a senior citizen, resident senior citizen. So what is the basic exemption applicable? 3 lakh. Up to 3 lakhs I don't have zero tax, but I have only 2 lakhs income. 1 lakh worth of benefit which income tax department is giving me, I am not getting. What department told? This 1 lakh set off here. You can either set off 1 lakh, you can either set off with 111A gain, 112 gain, 112A gain, any gains, capital gains is there, right? Even though they are taxable at special rate, first set off, then balance gain will be taxable at special rate. That's what the provision says. If you have unutilized basic exemption limit, remember, sir, I have 3 lakhs. No, straight away can I set off here? No, not permitted. First basic exemption limit set off with normal incomes, which is balancing figure normal income. Balancing figure is there, right? Normal incomes, first basic exemption use there. You still have a limit. Then use it with 111A, 112, 112A, as the case may be. Use it there. Are you getting it? First I will use it with the 111A. Then I will use it with 112 if I have 112. Then I will use it with 112A. That's a structure I need to follow. Remember the order also. First I will use it with 111A. Then I will use it with, then if I still have 112A, then 112A. Okay. Now suppose now in this case 111A, how much it is? 2 lakhs. Now I have 1 lakh unutilized limit, right? This 1 lakh unutilized limit I will set off here. What is the balance 111A gain? 1 lakh. Balance 112A as usual, no set off is done, no, 3 lakh. Now what is the tax rate? This is 20%. Whereas here 1,25,000, remember in previous year 24-25, how much is the basic exemption for this? Remember, this is not a basic exemption limit. This is only at the time of tax computation we should reduce. We will not reduce it at the time of income computation. We will not reduce this at the time of income. Sir, if somebody asked me what is my long-term capital gain taxable amount, 3 lakhs. What is my taxable long-term capital gain? 112A, 3 lakhs only. When you are computing tax, up to 1.25, 0 tax. Beyond 1.25, 12.5, which means 112A long-term capital gain has a basic exemption limit. That's a different limit. 112A itself has a basic exemption limit. Okay, so balance amount is what? 1,75,000, which is taxable at 12.5%. So how much is the tax amount? Here it is 20,000, and here it is some amount 21,875. So total 41,875. That's how it will be. Are you clear? Now another example. You know, my total income is 7 lakhs. Only income I have, special income, is lottery, which is 5 lakhs. I have a lottery income which is 5 lakh. And you know what? I'm a super senior citizen. I am a super senior citizen. Now let me compute. Let me compute tax. Total income. How to compute tax? You know, special income, normal income. Special income how much? Which is actually lottery. Normal income is how much? 2 lakhs. It's on a balancing figure, nothing but. Balancing figure is how much? 2 lakh. My basic exemption limit is what? Array, I have 3 lakhs unutilized limit. I have 3 lakhs unutilized limit. I want to set off with this. Not permitted. Because unutilized basic exemption limit, unutilized basic exemption limit can be used to set off only 111A long short-term capital gain, 112 long-term capital gain, 112A long-term capital gain on listed shares. Only with these 3 types of incomes only unutilized basic exemption limit set off is permitted. Unutilized basic exemption limit set off is not permitted for lottery income. That is not permitted for black money. So this entire 3 lakhs is waste only. Nothing can be done. Now on this 5 lakhs, what is the tax rate? 30%, 1.5 lakh. The total basic tax is what? 1.5 lakh. That's it. Confident until now, everybody? So unutilized basic exemption limit, if you have, that first will be set off with 111A, because 111A is taxable at 20%. That's the reason first I will set off there. Suppose no, in the given question, 111A gain is before 23rd July 15%. In the same question in the exam, you have long-term capital gain before 23rd July, which is taxable at 20%. Unutilized basic exemption limit is there. Then you can set off with long-term capital gain 112. Very simple. Sir, I have unutilized basic exemption, sir. Where I can use this? You can set off unutilized limit with long-term capital gain 112. You can set off with 112A. You can set off with 111A. Anyway, you can set off. But what is the best way? If you have a limit, exemption limit, set off that with the income which is taxable at high rate. Depending upon before 23rd July, after 23rd July, high rate of income changes. Before 23rd July, long-term capital gains is having higher tax rate. After amendment, short-term capital gain, 111A short-term capital gain only is having 20% higher rate. So observe carefully. Are you clear? 99% this depth they may not test. Okay, so we don't know, because in the recent May, Jan exam, that's different. Okay, fine. For the first time only these points are going to be tested. For the first time only these points are going to be tested. Whether they will test to this level or not, we don't know. Are you getting it? So be careful. So unutilized basic exemption limit, that limit I can set off with 111A, 112A, 112, only 3 types of capital gains. Are you clear? Sometimes in exam, no, they'll give you simply short-term capital gain, no section mentioned. If nothing is mentioned and they're told it's a short-term capital gain, it's a normal income. What is it? Normal income. Long-term capital gain, always special income. Short-term capital gain, listed items only special income. I purchased land yesterday, sir. After 1 week, I sold land, I made a profit. It's a normal short-term capital gain. It is taxable at normal rates only. Normal rates means what rates? SSE specific tax rates. Clear all of you? Now you understood unutilized basic exemption limit point? Everybody? Yes, yes. Okay. Wait. That point I will discuss in capital gains. Somebody is asking regarding block of asset short-term capital gain. That's a short-term capital gain. Section 50. Normal only. Normal rates. Remember again, capital gains, no, just one breakup I'll give you for your better understanding. Okay. Sir, capital gains are taxable at what rate generally? First of all, capital gains are two types. Long-term capital gain, short-term capital gain. Again, long-term capital gains are only two types. 112 capital gain, 112A capital gain. 112 capital gain tax rate is 12.5. 112A also tax rate is 12.5. 112 capital gain before amendment 20%. 112A capital gain before amendment 10. Short-term capital gain. Short-term capital gain is again two types. 111A short-term capital gain, other short-term capital gain. 111A short-term capital gain before amendment 15%, after amendment 20%. Other short-term capital gain, sir, I sold some jewelry, sir. Short-term capital gain I got. I sold depreciable assets, sir. I sold short-term capital gain. I sold immovable property, I got short-term capital gain. I sold intangible, I got short-term. All of them are taxable at normal rates. All of them are taxable at normal rates. They will be added in balancing figure. They will be considered as part of balancing. When you are computing tax, no, out of total income, special tax rates only you will eliminate. Everything else is a balancing only. That is a short-term capital gain, business income, salary income, other sources. You don't have to worry. That's why I told you what, when you're computing tax, how you should compute. First identify total income. Special incomes allocate. What are special incomes? 112, 112A, 111A, 115BB, 115BBJ, 115BBE. Yes or no? Allocate. Special rates. Wherever special rates are given, allocate. Remaining all are normal. Are you clear? That's it. How many of you have listened tax classes earlier? Just income tax. Huh? Okay, fine. You have this clarity earlier? This is the problem. They read, everybody will read. They will not have clarity. That's the point. That's the problem. Okay? Crystal clear. Everything has to be understood. Structuredly, you should understand. Okay, now we are getting more clarity. Yes, that's it. So we completed. One question they're asking is, yeah, I will give you one illustration here itself. One illustration I'll give here. Okay, SSE has same 7 lakhs limit. SSE has how much income? Total income 7 lakhs. When I see the breakup of this income, no. Long-term capital gain 112A income is there, which is 5 lakhs. How much it is? 5 lakhs. That's it. There is no other special income. Remaining are short-term or other sources or PGBP or some other income. Now I want to compute total income. I want to compute tax liability. First, when I'm computing tax liability, I need to split the total income into two parts. Always follow this. You see, I can directly compute, no, here, but I'm not doing it. Always, whenever I'm taking illustration, I'm following the format. First, special incomes. Allocate. Long-term capital gain 112A. How much it is? How much it is? 5 lakhs. Okay. Then balancing figure is what? 2 lakhs. Suppose this SSE is a super senior citizen. What is this SSE? Super senior citizen. How much is basic exemption limit? So after set off, still unutilized basic exemption limit. What this unutilized limit SSE can do? Set off with 111A, 112, 112. Remaining are not there. So 111A. 3 lakhs I will set off. What is the balance 112A income? 2 lakhs. Now I need to compute tax on this balance 112A income. Now I need to compute tax on this, right? When I am computing tax, again I have a benefit. When I am computing tax, again I have a benefit. 1,25,000 is a benefit only at the time of computation of tax. It is not exemption. Be careful. They said what? Did they say 112A section is there? What that section says, you know? If you are selling any listed equity shares, long term, you get a long-term capital gain that is taxable at 12.5% over and above 1,25,000. That's what they said. They didn't say 1,25,000 is exempted. Be careful. If at all they say exempted, no. If at all they say exempted, no. My total income is not 7 lakhs then. My total income is 5.75 lakh only. There is a difference between income is exempted and there is a difference between income exempted and slab limit. Suppose, no, sir, my total income 7 lakhs, sir. Anyhow, 5 lakhs I'm exempted. No. Can I say my total income is 2 lakhs? My total income is 7 lakhs only. First 5 lakhs is not liable for tax. There is a difference between income not liable for tax. Exempted income. Exempted income means what? I will not consider that in income itself. Up to 5 lakhs income is not taxable means what? Income is considered. Totally 7 lakhs is my taxable income. But first 5 lakhs, super senior citizen, nothing is taxable. Normal citizen, first 2.5 lakh, nothing is taxable. Senior citizen, first 3 lakhs, nothing is taxable. This is what you need to understand. Sir, I have a 112A capital gain, sir. What is my taxable capital gain? 5 lakh. But when you are computing tax, initial 1.25 lakh, tax rate is 0. Tax is there, but at 0. In GST or somewhere, 0 rated supply and exempted supply. I hope you know. You understood the difference. Exactly. Slab limit is there, right? This 1,25,000 is like a 0 rated supply. 0 rated means what? This is taxable at 0. Tomorrow what they can do? They can remove this. So that entire gain is taxable at 12.5%. Are you clear? So if you have unutilized basic exemption limit, first set off with 112A. If at all 112A is there, set off. After set off 112A, income will be there. Then on that, when you are computing tax, again eliminate 1.25, balance is taxable at 12.5%. Are you clear? That's it. Okay, this 1,25,000, remember guys, this 1,25,000 is not exemption. This is basic exemption limit within long-term capital gain. This is a basic exemption limit within long-term capital gain. Clear all of you? That's it. Now, so what we completed? We completed unutilized basic exemption limit point. Easy. All of you, until now it is easy. Now let us compute default tax regime tax rates. Now let us understand what are the tax rates under default tax regime. Right now what we completed, tax rates under optional. By the way, remember, whether it is optional tax regime or default tax regime, special incomes tax rates are same. Balancing figure is the rate. On that, what is the tax rate? There I need to first see again, default tax regime or optional tax regime. Suppose if it is optional tax regime, then resident or non-resident. Then resident, senior citizen or super senior or normal. On which value I need to check all these questions? On balancing figure value. What is balancing figure in our question, in our example? Normal incomes. When you are computing tax on normal incomes, the first question, tax regime, default or optional. Second question, resident or non-resident. Third question, resident, suppose normal citizen, senior citizen or super senior. Accordingly it will decide. Are you clear? Unutilized basic exemption limit concept is available only for resident individuals. It is available only for resident individuals under both the regimes. Under both the regimes. You see, that's why you see how I cleverly gave A. You know, tax rates, you see, part A, concessional rates under default tax regime. Then I have given what? Part B, normal tax regime. Then you see, separate concept I gave, 16th one. Incomes which are taxable at special rate. What point I said here? Irrespective of regime. These special rates of incomes are irrespective of regime. Means unutilized basic exemption limit is available irrespective of regime. But it is available only for residents. Able to understand. Okay? Now again. Okay, sir. Default tax regime, let us understand. So when I say whether I say default tax regime or optional tax regime, I am only discussing from which incomes point of view? Balancing figure point of view. What is balancing figure? Out of total income, special incomes eliminate. Which special incomes? 112A, 112, 111A, 115BB, lotteries winnings, 115BBJ, online games, 115BBE, black money. Eliminate all that. Still income is there. Then that is normal income. That income is taxable at what rate? Look at the regime. Normal tax regime, already discussed. Default tax regime, now we are discussing. Are you clear? Now, under default tax regime, what is the basic exemption limit? You know, 3 lakh. Under default tax regime, the basic exemption limit is straight away 3 lakh. So first 3 lakhs tax rate is 0. Here, resident or non-resident, no discrimination. Senior citizen, normal citizen, that and all, nothing. Everybody up to 3 lakhs tax rate is 0. You see how many slabs we have? 1, 2, 3, 4, 5, 6 slabs we have. How many slabs we have? 6 slabs we have. Up to 3 lakhs, what is the tax rate? 0. Next, 3 to 7 lakhs slab, 5%. Yes or no? 3 to 7 lakhs slab, 5%. Okay. 7 to 10, 10%. 10 to 12 lakh slab, 15. 12 to 15, 20. Above 15 lakh, 30%. Above 15 lakh, how much is the tax rate? 30%. Nothing but here the slab is every 3 lakhs. Okay. Only actually it's not like correct, it's not correct way. Okay, let us because it's changed now. Jan 25 exam when you wrote, no, up to 3, 3 to 6, 6 to 9, 9 to 12, 12 to 15, every 3. But now what they did, second slab they changed, and fourth slab they changed. 3 to 7 they made. Earlier it was 6 lakhs, now it is 3 to 7. Here it is earlier, no, 7, here it is 6 to 9. Very simple. How old one? 0 to 3, 3 to 6, 6 to 9, 9 to 12, 12 to 15, more than 15. But now what happened? This they made it 7. This they made it 10. Are you clear? Okay. So 1 lakh extra they increased. Able to understand? So that's it. Able to understand? So first 3 lakhs, what is the tax rate? 0. 3 lakh to 7 lakhs. 3 lakh to 7 lakhs portion of your total income, balancing figure income, up to 3 to 7, that portion of income is taxable at 5%. 7 to 10, that portion is taxable at 10%. The rate is exactly 555 increases. There is no 25% slab here. So 5, 5, 5, 5, directly 10. 0 to 5, 5 to 10, 10 to 15, 15 to 20%, 20 to directly 30. There is no 25% slab rate. Even in optional tax regime also, there is no 25% slab rate. So 25% slab rate is not there anywhere. There is no 25% tax rate under optional tax regime or default tax regime. Remember that. Okay. Now, so 3 to 7 lakhs, which means 4 lakh. 4 lakh is taxable at what rate? 5. 7 to 10, which means 3 lakh. Which is taxable at 10. 10 lakh to 12 lakh. Only 2 lakhs is there here. Be careful. 15%. So, how default tax regime, 15% income is only on, 15% tax rate is only on how much maximum income? 2 lakhs. Sir, beyond 12 up to 15, sir, 3 lakh. Okay. Which is taxable at 20. Beyond 15, whatever balancing figure is there anywhere. Here. Okay. How much it is? Taxable at 30. Able to understand. These rates you need to remember. First 0 to 3, 0 tax. 3 to 7, 5%. 7 to 10, 10%. 10 to only 12 lakhs, 15. 12 to 15, 20. Beyond that, 30. That's it. Clear? Now, let's compute one question. Let's compute one question here. Okay. Suppose I have 19 lakh. I have 19 lakh. And long-term capital gain 112A is equal to 3 lakh. Okay. Short-term capital gain 111A is equal to 2 lakh. Lottery, this is actually, let us assume this is actually 30 lakhs. Okay. 30 lakhs. Lottery is equal to 5 lakh. Okay. Lottery is equal to 5. And that's it. It's okay. Long-term capital gain. There is another long-term capital gain. 112 long-term capital gain, not 112A. 112 long-term capital gain, sum 2 lakhs. Okay. SSC, super senior citizen, resident individual, default tax regime. Default tax regime means no basic exemption, different. Senior citizen or super, that and all irrelevant. Yeah, compute. Same format. First identify special incomes, then balancing figure. Shall we? So 30 lakhs is there, right? Now I will compute. So, 112A, how much it is? 3 lakh. By the way, tax rates no take only after amendment rates. 112A, 112, 12.5. Short term capital gain, 111A, 20. Winnings, 30. 112 capital gain, how much? 2 lakh. 111 capital gain, how much? 2 lakh. Okay. Then, lottery, how much? 5 lakh. Okay. So now balancing figure is normal income, right? How much it is? Oh, 18 lakhs we are getting. Okay. 18 lakhs is the balancing figure. Now since basic exemption is very high, so there is no unutilized, I can directly apply tax rates here. But 112A, initial 1.25 lakhs, there is no tax rate. Balance 1,75,000. What is the tax rate? 12.5%. How much is the amount? How much it is? Sorry, 2,000. Okay, 21,875. This is 12.5% is equal to 25,000. This is 20% is equal to 40,000. This is 30% is equal to 1,50,000. Total special incomes tax. Total special incomes tax. How much it is? 190 plus 46, 2,36,875. Correct? 2,36,875. Now normal incomes, balancing figure how much? 18. Same structure. First 3 lakhs 0, 3 to 7 4 lakh at 5%, 7 to 10 lakh 3 lakh at 10%, 10 lakh to 12 lakh 2 lakh at 15%, 2 lakh 12 to 15 3 lakh at 20. Here up to 18 is there. So every slab is applicable in this case. Okay. Beyond 15, how much? 3 lakh, which is at 30%. Okay, which is at 30%. So 20,000, 30,000, 30,000, and 60,000, and 90,000. What is the total tax? 1,50,000 plus almost 80, 2,30,000. Correct? 2,30,000 plus 2,36,000, 4,66,875. That's it. Understood? Everybody? Suppose no, in the given case no, they asked it's a normal tax regime. Only this part will change. This will remain same. Okay? Only this part will be affected by tax regime. Senior citizen and all will be affected only this part in normal tax regime. In a default tax regime, the special income computation is always same. Are you clear? But depending upon tax regime, unutilized basic exemption limit, if at all there, that adjustment will impact you. Be careful. Okay? That's it. Unutilized basic exemption, if it is there only, this will impact. Otherwise, no impact at all. Clear all of you? That's it. So with this, we discussed one more major concept called unutilized basic exemption limit. Understood all of you? Everybody? Yes. Now, you know what we completed technically? We completed how to compute basic tax. We completed this. Now we need to compute how to decide surcharge, how to calculate rebate. You know, surcharge and marginal relief are interlinked. Rebate is a different provision. Altogether, rebate is a different provision, whereas surcharge and marginal relief are interlinked. Okay, so first I will cover rebate provision. Rebate. First, what I will cover? Rebate provision under 87A. Rebate provision under 87A I will cover. Rebate provision under 87A I will cover. Okay, now, so 2 minutes gap? Yeah. Yes, we will compute now rebate first. It's a 23rd concept. Come to 23rd concept in the basic concept chapter, page number 24. Okay, rebate. You see, rebate is discussed separately for two categories again. Our default tax regime rebate is different, optional tax regime rebate is different. What is this section? By the way, there is a section called 87A which talks about rebate for whom? Resident individuals. Unutilized basic exemption limit concept is also available to resident individual and HUF. This rebate is only for individual, even HUF is not eligible. Okay, so what is this particular rebate is all about? So suppose eligibility under optional tax regime, when rebate is eligible, if the total income is less than or equal to 5 lakh. Remember, what is less than or equal to 5 lakh? Special income or normal income or total income? Total income. It's not normal income. If total income is not exceeding 5 lakh, then rebate is nothing but discount. In your basic tax, first you compute basic tax. As usual, compute basic tax. Same, normal, special. Format, basic tax. Add surcharge, not applicable. Subtotal minus rebate. Rebate is equal to how much? Lower of basic income tax or 12,500. You see very clearly I told lower of basic tax or 12,500, whichever is lower, that much you will claim it as rebate. For example, I have a total income of 5,01,000 rupee. I have a total income of 5,01,000. First let me compute how much is the tax. I will let me compute. Okay, let us assume in this triple 1 year long term capital gain is 2 lakhs. How much is triple 1 year long term capital gain? 2 lakhs. SS is a normal citizen, resident. SS is a normal citizen, resident. So how much is my triple 1 year short term capital gain? 2 lakh. So special income how much? 2 lakh. What is the balancing figure? 3 lakh 1,000. Oh, since 3 lakh 1,000 normal income, normal citizen is more than basic exemption, there is no unutilized basic exemption, which is taxable at what rate? 20%. How much is the tax? 40,000 rupees. 3 lakh 1,000 is taxable at what rate? Slab rates. Slab rates are what? Up to 2.5 lakh, 0. 2.5 to 5 lakh. But I don't have 5 lakhs normal income. I have only 51,000 normal income, which is taxable at 5%. How much is the answer? 2,550. Total basic tax 42,550. Now I will go as per my format, basic tax format. So basic tax is equal to 42,550 plus surcharge. In this case it is not applicable, so format is again subtotal how much? 42,550 minus rebate under section 87A. My total income 5,01,000. Since my total income is exceeding 5 lakh, rebate condition is what? Not exceeding 5 lakh, less than or equal to 5 lakh. So in such a case, will I have any rebate option? 0. So what is my balance tax liability? 42,550. Yes or no? So this is subtotal, correct? Plus our format, if you see, health and education says at 4%. 42,550 into 4% is what? 1. Okay, 1702. 1702. So what is my gross tax liability? 44,252. Correct? That's it. Suppose if my total income is 4,99,000, or let us assume that 1,000 is not there. Let us assume my total income is exactly 5 lakh. Same information, short term capital gain, which is taxable at triple 1A, 2 lakhs. Balancing figure 3 lakh, correct? Fine. This is taxable at slab rates. First 2.5 lakh, 0. Next 2.5, but only 50,000 is there, correct? At 5%, how much it is? 2,500. Whereas this is taxable at 20, which is 40. So total basic tax 40,500 plus surcharge 0. Subtotal how much it is? 500 minus rebate Here my total income is exactly 5 lakhs, less than or equal to. Now when it is less than or equal to 5 lakhs, how much rebate I can claim? Lower of basic tax or 12,500, basic tax 42 or 12,500, whichever is lower. 12,500 I will reduce. Balance amount is what? 30,000. Subtotal, yes or no? Plus cess 1,200, 31,200. That's it. You understood? You see, I am never deviating from the computation format. I always get right answer. There is no possibility that I will get a wrong answer. Not because I know the subject, but because I'm following the format. I am not deviating. I'm not applying any shortcut directly. I'm always sticking to the format. Clear? Now my question. Okay, fine. Same question. What if this is not a short-term capital gain? What if this is a lottery income? Then what is the tax rate? 30%. Then it is 60,000. Then basic tax will be 62,500, but rebate will be still 12,500. Balance tax is 50,000. Then how much it is? 1,500. 51,500. Immediately some students might get a doubt. Lottery income rebate will come. Yes. Under 87A there is no restriction. Are you getting it? Those of you who are watching, once again repeaters especially, or first timers, be clear. Lottery income, special income can be lottery, special income can be black money, it doesn't matter. Able to understand? If your total income is not exceeding 5 lakh, by default you are eligible for rebate up to 12,500 or basic tax, whichever is lower. Whether that basic tax amount is because of lottery, because of long-term capital gain, because of short-term capital gain, no questions will be asked. Clear? That's 87A rebate for normal tax regime. Understood? Everybody? Now under default tax regime, under default tax regime, how to compute rebate? Under default tax regime, no one incentive. Department want to encourage people for default tax regime. They want more for default tax. So that's why what they're doing. That's why in default tax regime, basic exemption is 3 lakhs. Even you see default tax regime, tax rates are at lower rate. For example, no, under default tax regime, I have 15 lakhs income. Under optional tax regime, I have 15 lakhs income. Both the cases, let us assume my income is 15 lakhs only. Whether it is default tax, optional tax, my income is 15 lakhs only. Let us assume for the time being, example. Generally, income will not be same. Under default tax regime and optional tax regime, my income will be pakka different most of the times. Okay, very rare cases it will be same. Suppose if I'm going with the default tax regime, suppose if my income is 15 lakhs in both the cases. Okay, under default tax regime, up to 15 lakh, the tax liability will be 1,40,000. Up to 15 lakh rupees worth of income, my tax liability will be 1,40,000. Sir, how, sir? 15 lakh, first 3 lakh, 0. 3 to 7, 4 lakh into 5%. 7 to 10, 3 lakh into 10%. 10 to 12, 2 lakhs into 15%. Yes or no? Then above 12 to 15, 3 lakhs into 20%. How much it is? So 20,000, 30,000, 30,000, 60,000. What is the total amount? That's what. Up to 15 lakhs, what is the tax amount under default tax regime for normal incomes? 1,40,000. Whereas under optional tax regime, same 15 lakhs if I have income, my tax will be 2,72,500. My tax will be 2,72,500 for normal citizen, 2,70,000 for senior citizen, 2,60,000 for super senior citizen. 2,50,000 or 2,60,000, 2,60,000. Okay, like look at very simple. 15 lakhs, right? Normal citizen will compute. Normal citizen. First 2.5 lakh, 0. Next 2.5 to 2.5, 5%, 12,500. 5 to 10, 5 lakhs into 20%, 1 lakh. Above that, 5 lakhs was there. Above 10 into 30 is equal to 1,50,000. 2,62,500. What is it? 2,62,500. You see, that's the benefit of default tax regime. Even though in both the cases you are having 15 lakhs income, under default tax regime, your tax is just 1,40,000, whereas under optional tax regime, your tax is 2,60,000. Remember, your income is same in both the cases, but your tax amount, you see how much variation is there. So default tax regime, no doubt a benefit to the SSC. Not only this benefit, those of you choosing default tax regime, there is another benefit, rebate. Rebate limit is also higher. Total income is up to 7 lakhs. If at all your total income is up to 7 lakhs, you are eligible for rebate of basic tax amount or 25,000, whichever is lower. Whatever the basic tax you have or 25,000, whichever is lower, that much rebate you can claim. Are you getting it? Whereas optional tax regime rebate is just 12,500. Default tax regime rebate is 25,000. Are you clear? Now, for example, no, my total income is how much? 6,90,000. If I show the breakup, no, short-term capital gain 111A 1,90,000. How much is the short-term capital gain 111A? 1,90,000. Lottery income 50,000 is there. That's it. Remaining all are normal incomes. Okay. Remaining what normal incomes? I'm not bothered about it. Special incomes only I will bother. So 6,90,000 I will split into two parts. So again I will split into two parts. Short-term capital gain 111A. How much it is? 1,90,000. Lottery, you know how much it is? 50,000. Balancing figure is what? 4 lakh? 450 ma? 4,50,000. This is taxable at 30%. That is taxable at, by the way, since normal income is more than basic exemption limit, no unutilized concept. Therefore, I am directly applying the rate. Okay, 20%. 38,000. This is at 30%. 15,000. Total basic tax 30 plus 10, 40. 53,000. Understood? Now, this is taxable at slab rates. Up to 3 lakhs, 0. 3 to 7, I have only 1.5 lakh. 3 to 7 lakhs means I have only 1.5 lakh, which is taxable at 5%, which is 7,500. What is the total basic tax? How much it is? 60,500 plus surcharge, not applicable. So subtotal how much? 60,500 minus 87-year rebate applicable. Yes, my total income is not exceeding 7 lakh. Therefore, basic tax or 25,000, whichever is lower, 25,000 I can claim deduction. Now, how much is my balance? Balance subtotal 35,000 plus 4% education cess. Then that's how I get gross tax liability. 1,000. 1,000. Okay, that's fine. So whatever 37,000 approximate something you'll get, or 36,700 something you'll get. Okay, yes, 36,950 something. Okay, clear, easy, everybody. Now same example I'll slightly modify. Okay, I'll slightly modify the example. Now look at, I have 7,10,000 total income. I have 7,10,000 total income. Okay, 111A short-term capital gain, same 2 lakhs. Or else I will give you 2,10,000. How much it is? 2,10,000. Okay. Lottery income 50,000. This is the breakup. Now let me compute. Okay, correct? Same format? Yes. You please compute, don't ask me notes. So just briefly observe here carefully. We have many problems already in our question bank, don't worry. So these observe mainly, observe the computation process mainly, structure. Now 111A, how much it is? 2,10,000. 115BB, nothing but lottery, how much it is? Balancing figure how much? 4 lakh 50. This is taxable at what rate? This is taxable at slab rates. Okay, this is taxable at 30%. This is taxable at 20. 42,000. This is 15,000. This is taxable at slab rate. First 2.5, no. First 3 lakhs, 0. 1.5 lakh into 5%, 7,500. Now total basic tax. How much it is? 64,500. Correct? Then subtotal how much? 0. Surcharge is 0. So 64,500. Sorry, surcharge is 0. So subtotal is 66 minus 87A. Since my total income is crossing 7 lakhs, basically I am not eligible for rebate. But in default tax regime, one benefit is given. In default tax regime, one benefit is given for rebate. Generally, if it is optional tax regime, no. Straight away, if the income is crossing 5 lakhs, straight away if the income is crossing 5 lakhs, rebate 0. What is the rebate? No benefit at all. Sir, 1,000 rupees only crossed. See, tell me in this case, no. If at all my income is just 5 lakhs, not 1,000, extra 1,000 if it is not there, my discount would have been 12,500 rupees, no. Because of that extra 1,000 rupees income, that too. On the 1,000 tax amount is some 500 rupees or 1,000 rupees only tax also. Sorry, not even 5, some 250 to 5%, 50 rupees or 20% means 200 rupees only tax. If at all there. See, on that no, are 5% only. On that 1,000 rupees 5% means only 50 rupees tax extra my liability. Because of the 1,000 my liability 50 rupees tax extra, but I lost 12,500 discount. Because of that 1,000 income. Department is so strict. Doesn't matter. 1,000 rupees only extra, I don't bother. I gave rebate if your income is less than or equal to 5 lakhs. Here your income is more than 5 lakhs. You are not eligible for rebate. Sir, my income is only extra 1,000, sir. But you are cutting off 12,500 rupees worth of benefit to me. It's like that only. Whereas in default tax regime, here you see SSC income is how much extra? Only 10,000 extra, right? Only extra how much it is? 10,000. But rebate amount how much it is? 25. What they said, you see. Suppose no, rebate calculation if total income is more than 7 lakhs. What is the rebate calculation? Now I will see. First point number A, I will compute nothing but step number 1 or part A. Total income how much in our example? Minus, see the formula you see, total income minus 7 lakhs. Okay, so how much is the answer? How much is the answer? 10,000. Step number B, compute tax on total income. Already we computed which tax? Basic tax only. How much it is? 64,500. Correct? Step number B, 64,500. Clear? If B is more than A, then rebate is equal to B minus A. Okay, actually just a minute, let me do this. Okay, so B is more than A, then rebate is equal to B minus A, but maximum rebate is how much? 25,000. Actually wait, I will there's a small calculation. Okay, lower of basic tax or 25. Okay, this is when, you know, when your entire income is normal incomes. When you have a special incomes, no, you can't just like that claim. Okay, fine, let me then rebate is equal to how much it is? B minus A. How much is the rebate? 64 minus 10, how much it is? 44,500 you are getting. Sorry, 54,500 you are getting, but maximum rebate can be 25. Here 25 is what maximum rebate you can claim. Are you getting the point? See, actually no, this steps why here there is a small confusion, I'll tell you. Okay, normally how is the provision, you know, I'll show you. Normally, if at all the rebate calculations and all were given based on what purpose, you know, assuming the entire income is normal income. Assuming entire income is normal income. For example, no, I have entire 7,10,000 which is normal. I have entire 7,10,000 which is normal. See, basically earlier, first no, let us compute income up to 7 lakhs. Let us compute first tax on 7 lakhs. First let us compute tax on 7 lakhs. How to compute tax on 7 lakhs? Up to 3 lakhs, 0. Next to 4 lakh is taxable at 5% is equal to 20,000. So what is the total tax? 20. Array, up to 7 lakhs, my tax itself is 20. But why are you giving rebate of 25,000? If I have income exactly 7 lakhs, my tax liability is how much? 20. But department is giving me rebate of? Because before amendment, slab rates in default tax regime are up to 30, 3 to 6, 5%, 6 to 9. Like earlier, why 25,000 rebate is there? I'll tell you. Because this 25,000 rebate is not for the first time in 24-25 year. 23-24 previous year onwards only this rebate is there. 87A default tax regime rebate, no, this is there from which previous year onwards? 23-24. Suppose no, if I am computing income tax for 23-24, assuming my income is 7 lakhs only, in 23-24 previous year, no, what are my tax rates old when you are writing old exams? Yes or no? That time what are the tax rate? Up to 3 lakhs, 0. 3 to 6 lakhs. 3 to 6 lakhs, only 3 lakh into 5%. How much it is? 15. Beyond 6 up to 9, but I have only 7 here. So 1 lakh, correct? 1 lakh into 10%, correct? 10,000. So up to 7 lakh, my tax amount itself is how much? 25. That time what they gave? Indirectly department want to give one benefit. If your income is up to 7 lakhs, you don't have to pay any tax. So that time up to 7 lakhs, if at all you are having any income, no, how much is the maximum tax? You will get 25,000. Assuming your entire income is normal. So how much rebate they used to give you? 25. Now that time what provision they brought? Extra provision, sir. For example, no, SSC income is 7 lakh 10, sir. What about this? Suppose no, as per 23-24, from your Jan exam point of view, I'm talking Jan 25, May 24, September 24 exam point of view, I'm talking. This whatever 0 to 3, 3 to 6 lakh, 6 to 9 lakh, this lab rate is not applicable for May 25 exams. I am talking from old provision point of view, why the rebate provision is like that. Okay. Now, so suppose my income is 7 lakh 10,000, I'm not eligible for rebate, right? So what the department said, suppose if I have income up to 7 lakhs, my rebate is 25,000, literally my basic tax is 0. Just because of this extra 10,000, I am losing 25,000 benefit. What the department said, what the department said is, so what is the step number 1? Total income 7 lakh 10,000 minus 7 lakh. Okay. So how much is the total income? 10,000. Okay. So step number 1. Step number 2. Tax on total income. How much is the tax on 7 lakh 10,000? As per old rates. I am talking about 23-24 financial year. I am talking about 23. I am talking about previous year 23-24 point of view. Be clear. I am not talking about latest provision. I am talking about the old provision. So 7 lakh 10,000 if I have an income up to 3 lakhs 0. Next 3 lakhs 15,000. So remaining 1 lakh 10,000 which is taxable at 10% is equal to 11,000. Total tax is how much? 26,000. So what is the total tax? 26. So basic tax how much? 26. Basic tax is how much? 26. Plus surcharge how much? 0. Subtotal how much? 26. Minus rebate how much? Working note number 1. What is the working note number 1? You apply this. You apply this. Okay. Yeah. So just a minute. So apply this. Total income right now in our example minus is equal to total income on what is the tax on total income? Just now we computed. Is B more than A? Is B more than A? Yes. If you see here, I condition if B is more than A, then rebate is equal to B minus A. How much is the rebate? So 16,000. Correct? So what is the balance tax? plus 4% cess, 10,400. This is how the answer comes. Nothing but what are they saying, you know? Just because your income crossed 7 lakhs, it is not correct for the SFC. It is not correct for the department to cut entire 25,000 benefit. So what they did, I'll do one thing. If you have only 7 lakhs income, zero tax. Extra how much income you got? 10,000. Because of the department is asking you to pay how much tax? Sir, I got income itself 10,000 extra, sir. But for the 10,000 income, you're asking 26,000 tax. Instead of that, sir, take income itself. Don't ask me tax. I'm giving income. See, I have to pay tax on income. I will not pay tax. I will pay income itself to you. Take 10,000 with you. Don't ask me 26,000. This is how the concept behind this rebate. This is similar to marginal relief. We are going to discuss marginal relief concept, surcharge concept. There also a similar logic will be there. So what am I saying? Sir, just because I have 7,10,000 income, you are asking me 26,000 tax. If at all I have only 7 lakh income, my tax would have been zero. My tax would have been zero. Just because of this 10,000 extra income, you are asking me 26,000 rupees worth of tax. I will do one thing. I will sacrifice this 10,000 to you. Please rebate me 16,000. Give me rebate. That 10,000 I'm ready to pay. Plus cess I'm ready to pay. This is the logic. Are you clear? Everybody, all of you, indirectly how much rebate I'm claiming here? 16,000. Now, I made a complicated problem here, which generally nobody will tell you this. If at all 7,10,000 includes special incomes, how to calculate rebate? This is the question. Same step, first basic taxes, this one. Then 87A. What is 87A rebate? You know, here no, those steps may not apply. Technically speaking, it's a loophole in law. It's a loophole in law. Okay, fine. So 87A, step number 1. What is step number 1? Total income how much? 7,10,000 minus 7 lakh is equal to 10,000. What is step number 2? What is tax on total income? Step number 3. This is nothing but A, B. Is B more than A? Yes. Then rebate is equal to 54,500. 54,500. So balance tax is 10,000. But you know well, rebate cannot exceed. Rebate cannot exceed. Here we will claim maximum how much rebate? Exactly. Are you clear? So balance amount is what? Balance amount is what? Sum 39. 39,500 plus 4%. This example you will not find anywhere. Nowhere you will find this example. Are you clear? Here I took, here no, in our material also no, add one word. Then rebate is equal to B minus A, right? Maximum rebate how much? This is most important. The rebate amount cannot be more than 25,000. This logic alone you remember. Clear? So typically rebate with relief when special incomes are there also discussed. Clear? Easy? I discussed previous tax rate, previous before amendment tax rate as well as after amendment tax rate. Both I have covered. Everybody understood clearly? Okay, very simple. Sir, my income is more than 7 lakhs. First compute tax as usual, basic tax. Add surcharge, 0. Subtotal minus rebate. Since your income is more than 7 lakhs, how to calculate rebate? These steps. First step, A, total income minus 7 lakhs. How much? 2. Just now you calculated tax on total income. How much? B is more than A, na? Yes. Then B minus A is equal to rebate. This rebate, if it is more than 25, then restrict to 25. If it is less than 25, reduce that. Reduce from tax computation format, basic tax. Then balance tax will be there. On that cess you will add. Final answer you will get. Always follow the format. Sir, my income is less than 7 lakhs, sir. Straight away up to 25,000 you can reduce. From basic tax, straight away up to 25 you can reduce. You don't have to worry about it. If my income is more than 7 lakhs, default tax regime, rebate computation will be done in 3 steps. That's it. Easy. All of you. one of the major provision is over. Many times MCQs was asked. Even September paper, MTPs you see, May paper you see, Jan paper you see, rebate computations they were asking. Pakka in every exam they're asking. Clear everyone? So we understood now how to compute rebate under optional tax regime, how to compute rebate under default tax regime, both. That's it. Okay. Yeah. So now we will have to discuss about surcharge and marginal relief. Then maybe agriculture income if possible. Okay, that also we will cover. Or maybe agriculture income will hold it for some time. After we get little more command on the other topics, then we might discuss agriculture income. We'll see. Depending upon the moment, we will see. Confident until now? That's it. Okay, 5 minutes. We'll continue. 1 minute. Yeah, please. Huh? One more point. I missed to tell one point. Okay. Yes. There's one point. Yeah, very good. You reminded me. Okay. So you see here, one most important point you see, rebate under 87A is allowed from income tax computed. Nothing but basic tax. Nothing but what? Basic tax. Okay. Before adding cess. So which means after reducing rebate, if some tax is there, on that cess has to be added, final tax liability will come. Point number 1. Point number 2. Rebate under 87A is not available in respect of tax payable on long-term capital gains under section 112A. Suppose if my tax amount, basic tax amount consists of tax related to 112A, I will eliminate that from basic tax. Balance basic tax, maximum that much only I can claim rebate. After claiming rebate, can my tax liability be negative? After claiming, after discount, no, product price will be negative or positive or zero or max. Exactly. After claiming rebate, maximum tax liability will be either zero or some positive figure. That's it. On 112A income, rebate is not available. There is a reason. Already in 112A income, 1,25,000 exemption they are giving. Indirectly rebate they are giving there. That's why. Able to understand? That's it. So if at all your basic tax portion has 112A tax amount, then separate that. Then that basic tax only rebate can be claimed. Then again total the basic tax plus cess. Clear? That's it. So 112A income is not eligible for rebate. That's it. Yeah. So we'll continue in the next session. We'll take 5 minutes break and then continue the next session. Yeah. Somebody is asking rebate related calculation when total income includes 112A income. Okay. For example, no. 7,10,000 is there. See, remember there is no guidelines on this. Okay. Even income tax software is there, right? Department released software. That itself will not compute right number. We take some judgment there. Okay. Fine. 7,10,000. Let us assume the 7,10,000 has 3,10,000 rupees approximately 112A gain. 112A gain. And we all know that 112A gain is not eligible for rebate. 112A gain is not eligible for rebate. Fine. Now first let me compute basic tax. Don't be in a hurry. So first I will compute basic tax. What I will compute? 7,10,000. Okay. I will split into two parts. How much it is? 3,10,000. That's the only special income. Let us assume that's the only special income. Balancing figure 4 lakh. This 3,10,000 up to 1,25,000 I have benefit, right? Balance is what? 2 lakh, 1,85,000, which is taxable at 12.5%. Let us assume for convenience sake 10% it is taxable. Let us assume the capital gain we got is on 23rd July before. Same year, 24-25 only, but 23rd July before we got, so that the tax rate is 10 for our convenience sake, computation convenience. 18,500. Whereas on this, no, slab rate up to 3 lakhs, 0. Remaining 1 lakh is taxable at 5%, 5,000. Total tax is how much? 23,500. Okay. Now, how should I compute the rebate? So first basic tax 23,500 plus surcharge 0, subtotal will be again same, minus rebate under section 87A, correct? So working note 1, this is what they tell, correct? Working note 1. So first step number A, 7,10,000 minus 7 lakhs is equal to how much? 10,000. Okay. Step number B, tax on total income. Here you should consider only excluding 112. Excluding 112, what is my tax amount? 5,000. Is my 5,000 more than 10,000? No. Therefore rebate is 0. Therefore the rebate is 0. Okay. So because when you are computing rebate, you should never consider 112A tax. You should never consider which tax? 112A tax. Wait, I will tell you, I will clarify. Okay. I know all your possible questions in your mind. Let me clarify that. Okay. Fine. So since step number A, 7,10,000 minus 7 lakhs is equal to 10. Step number B, tax on total income means which total income? Normal income. On normal income, how much tax the SSE got? 5,000. Is B more than A? No. Therefore, technically speaking, rebate is 0. Technically, rebate is 0. Okay. So, if at all B is more than A, then rebate is B minus A. Rebate cannot be negative, right? Yes or no? Rebate. So, therefore, rebate will be 0. Then 23,500 will be there. Plus 4% cess will be there. And that's how the balance tax will come. Are you getting it? Indirectly, department want to give rebate when? If normal income is more than 7 lakh. Or other incomes which are eligible for rebate is more than 7 lakh. Then that extra, because of the income, additional tax conflict, for that only they want to give rebate. Now, right now, even till date, there is no clarification whether this computation logic is right or not. Because if I go absolutely by the computation logic, this is what even the Act also says. How the Act says, you see here, how the Act says, for example, you see what the Act says. Just 1 minute. You see what the Act says. If at all total income is more than 7 lakhs. You see, provided that where total income of the SSE chargeable to tax under 115B is nothing but default tax regime, and the total income exceeds 700,000 rupees, nothing but 7 lakh, and income tax payable on such total income is exceeding the amount by which total income is in excess of 700,000 rupees. Okay. And the SSE shall be entitled to a deduction from the amount of income computed before allowing deduction on his total income, an amount equal to amount by which income tax payable is in excess of the total income, that excess. Correct? Understood? Now 112A section says rebate is not available under 87A. Are you getting the point? This provision we can't apply in the given scenario which I told. Because 87A, 112A, they will conflict with each other. So that time, point number B, step number B, tax on total income, they said, right? Which total income I should consider? Normal income I should consider. Suppose, in your logic, for example, suppose tax on total income. Let me consider tax on total income, how much it is? 23,000. Let me consider as usual, blindly 23,500. Is B more than A? Yes. Then rebate is equal to B minus A. How much it is? 13,500. But my normal tax is only 5,000 tax, right? I should not claim rebate on 18,500. No. I can claim rebate up to how much it is? 13,500. This is one more argument. We can take SSE favor argument, which is 13,500 rebate. But rebate cannot be claimed on 112A tax. Therefore, I will restrict the rebate only to, I will strictly go by letter of law. How I will go by letter of law strictly? Point number A. What is my total income minus 7 lakhs? 10,000, because no rebate computation step does not talk about 87A, all that. I mean 112A, special income, that and all they didn't talk. They only talk about steps. Step number B, what is my tax on total income? In the given case, 23,500. Is B more than A? Yes. Then rebate is equal to B minus A is equal to 13,500. Now my basic tax is how much? Now my basic tax is how much? 23,500. Just now I computed rebate. Just now I computed rebate. So when I'm computing rebate, I got answer how much? 13,500. Immediately checkpoint 112A section. What that section says? You should not claim rebate on. You should not claim rebate on tax portion belonging to 112A tax. In this 23,500, 112A tax portion is balancing figure tax portion is. So I cannot claim rebate on 112A tax portion. Therefore, I will restrict my rebate to exactly. Able to understand? You understood how to compute? Therefore, as usual, 112A tax came into picture. As usual, 112A tax came into picture plus 4% cess. Logical or not? But this is right or not, I don't know. Not just me, nobody knows. Even Nirmala Sitharaman don't know. First of all, she don't know rebate itself here. Obviously, why? She's a finance minister. Why she is bothered about it? Does she have May 24 exam? May 25 exam? No, right? Do you think finance minister read inter income tax law? The secretary will give. They will just read. That's it. Don't think Nirmala Sitharaman, Narendra Modi. Do you think they all read the income tax law like you? Do you think Narendra Modi read this entire income tax law before passing the bill? Common sense. Yes or no? Yeah. Okay. That's it. So this is the logic I can take. So rebate I computed. How much is the rebate answer I got? 13,500. But 112A section says rebate amount should not be claimed on 112A. So what am I doing? Out of this 13,500, 112A tax I'm removing. Only balance tax only I'm claiming rebate. That's it. So I am satisfying 87A logic. I'm also satisfying 112A logic. Logically this answer is right. Logically this answer is right. Another alternative is what, abruptly going like, okay, total income means in 112A point of view excluding 112A income. Sorry, 87A point of view, total income for rebate purpose means excluding that logic. That is one more. I think this sounds more logical. This logic is, this particular computation method is more logical. Easy. That's it. Okay. You will not find any problems like this. Nowhere you will find these illustrations. Okay.